Yes, students. Now we will learn customs law. Whatever we'll be learning now, guys, is a part of chapter 7 as per ICSI study material. Okay, fine. Let us see some basics about customs. We will see later, guys. There are also a calculation part, like how do we compute the import duty on the import of goods. We have that calculation part also. Other than that, there is also a theory concept like import procedure, export procedure. Then what is the power of the customs authority and all, we will see. Fine. So till now we are completely done with the GST, guys. Under indirect tax, two things are covered for you. What are those? GST and customs, both. So GST portions are completely done. Now we will focus on the last topic, that is customs law. Overview of customs law. Customs duty is an indirect tax imposed under the Customs Act formulated in 1962. The Customs Act 1962 is a basic statute which governs entry or exit of different categories of vessels. Vessels means ship, aircraft or goods and passenger into or outside the country. So customs law, guys, what and all it will regulate? It will regulate the movement of goods or services or even the passengers as well as the mode of transport, that is the vessel, aircraft and all, from India or to India. In simple, import as well as export. Sir, will they have the control over passengers and all? Goods, okay. Passenger, for person coming into India, they will levy tax, huh? No, no. Sir, is it import of persons? No, no, no. Or if person is going outside India, export, ah? No, no. But when a person is coming into India, if he brings any goods along with him, is it considered as import? Yes. Especially this gold smuggling and all will happen. You know, will customs authority have an authority or control over the passengers who is coming into India or going outside India? Yes. Especially who is coming into India. They will check whether you are bringing any like illegal items or gold or anything. If you pay tax and bring it, no problem. But if you are trying to smuggle it, then extra tax. Clear? You would have heard about the stories like, sir, in the customs or in the airport, they have stopped many people or one person. They checked that they had kept so many grams of gold in some different places. Clear? In that case, they will try to keep it in different places and all. But now technology, thanks to technology, sir, if they just scan the person, will they get to know that whether there is any gold carried by him? Yes, guys. They would have hidden it anywhere in the body, but still they will be able to identify it. You would have seen, no? Assume some people have kept gold in the socks, in the shoe, or even in the belt, somewhere and all, different places. Still, they will be able to identify, guys. The act extends to all of India and save as otherwise provided in this act. It applies to any offense or contravention thereunder committed outside India by any person. So now, sir, is customs law applicable only within India or outside India also? Guys, within India, it's for sure applicable. But if there is any contravention or if assume smuggling is happening, will they have a control over it also? Yes. For example, someone has stolen the goods from you and he has left India. Will Indian government still have a power to stop them? Yes, sir. Now they are not in India. Still they have power. Still they have a power. But obviously, in that case, what happens? No, another country also will be involved. We need to have an understanding with them. We need to have an understanding with them. Yes. Next, the Customs Act 1962 not only regulates the levy and collection of duties, but also serve equally important purposes like, guys, whenever there is an import, we need to levy what? Import duty. Whenever there is an export, there is something called as export duty. But most of the time when export is there, government will support it, telling zero tax. But even if it is levied, assume tax is levied. What tax will be levied, sir? Export duty. Any country, guys, will support the exports. Why so? Because our economy will improve. Money will flow into Indian economy. Whereas import, they will try to reduce it. Why, sir? Because money is going out. We are dependent on other country. And you have seen, if I depend on other country, how the people are acting now and especially USA. Okay, we are highly dependent on them for various import services. And many Indian companies are dependent on them for business. Especially IT companies. They have major clients in US, UK and all. Yes, sir. Now, especially for importing goods or services, if I am highly dependent on other countries, now if they change any regulation, if they increase the tax rate and all, it will affect us or our people. So, any government will try to reduce their dependence on other countries through reducing the import. Yes. So that is why even in India, in for few goods and all, when it is imported, we will leave a lot of import duty so that it will become costly and people should not afford to buy. Straight away, we cannot ban. Straight away we cannot ban. Why, sir? Because of international relationship. Now assume if I ban every goods from USA is banned in India, then obviously you know how cranky the people will act there, especially the president. Clear? Huh? Yes. Same way now, even in China, we cannot straight away tell China, you cannot sell your products in India. Anta. But during COVID and all, taking security as the reasons, they banned few products, few apps and all. Clear? Telling for security reasons, it is not safe for us. And there were instances like that. Because what happens? No, this app and all, or any other, the platforms, they will collect the information, Indian people information, and they will sell it to foreign suppliers. For that, they will earn money. Instances like this has happened. Okay, when we assume we log into any app and all, they will ask our details. Okay, we would have given it. Now they have the customer data. Yes, they will sell it. They will sell it either for person in India or outside India, and for that they will get paid. You would have wondered sometimes how will people, others call me? How did they get my number and all? Guys, selling of data is also one of the source of revenue. Selling of what? Students' data, or if it is a people's data or customers' data. Okay, because through that it might be a business for someone else, guys. Okay, coming back. What and all it regulates? Customs Act, regulation of imports and export. That is, sir, if there is import, what is the procedure? What should importer do? When should he pay import duty? How much should he pay? What is the procedure? Everything is given. Same way for exporter. If exporter is exporting the goods from India to a foreign country, what is the procedure? Okay, what is the export duty he has to pay? Then what for which country is sending it? Then all these details there is given. Because sir, for which country is sending is also important. Yes, they will ask exporter when he is exporting the goods. No, he has to tell for which country or the person for whom he is selling is from which country. Okay, chalo. Next, protecting of domestic industry. Now we will regulate, control import and export. We should also protect our people. No, who is our people? The domestic players. Okay, now what happens now? Especially if import is too much, then our industry will be affected. Our industry, especially what is happening, guys, mobile or electronic industry in India is highly dominated by Chinese players. Chinese players. Okay, sir, why? Because they are able to manufacture at a very less price, and they are coming and dumping them in India. Okay, at very less price. And Indian players are not able to manufacture at that cost. Indian players are not able to manufacture at that cost. And China is actually known for mass production of goods at a very reasonable price. Clear, you would have seen many of the mobile company, all this, what is that? Oppo, Vivo, OnePlus, all these are Chinese. Xiaomi, all this. And one parent company is there. Out of, sir, all this company, all this mobile company, even though you see different brand name, the company is only one. The company is one parent company is there who is managing all this. Yes, sir. Chalo. So we need to I mean, who should take the steps in order to protect the domestic industry? Government. What do they do, sir? Simple. They will not ban the products. See, if it is possible, if it is causing a problem for us, we may ban it. But at least for a good relationship with the countries at an international level, we cannot straight away ban. So what do the government do is they will start leaving more and more tax on it. Now, sir, why is iPhone very costly in India? Because we levy a lot of import duty. Clear. Even Elon Musk wanted to enter Indian market. Tesla, correct? But Indian government is very clear. Sir, you cannot manufacture outside India and sell it in India. If you want, set up a manufacturing unit here. Clear. And if you manufacture outside India and want to sell in India, okay, no problem. But we will levy import duty. We will levy import duty. And what happens? Automatically, the cost of the car will go up. People may not afford to buy it in India. Clear. Very rich people can buy it, but not everyone. So Elon Musk met all the government officials also telling, sir, give me an opportunity, waive off the import duty on import of car, that, this and all he requested. But government didn't agree. Government was very clear. Indian government was very clear telling, no, no. Because he has set up a manufacturing plant in China. He want to manufacture the car there and sell it in India. And he is telling, please waive off the import duty. How is it possible? What do we get then? Correct. Now, Indian government will get what? And what about our players? Our players in the sense, Tata Motors, Maruti, or even Mahindra and all, they are doing good. Now I will spoil my players. If I allow you freely, you will come and disrupt the market completely. And you know, if I allow them, they and all is having a lot of money power. They can come and disrupt the entire industry. Yes. So that is why government was very clear. They told, no, no, sir. If you want, you come and manufacture here and sell it however you want. We will treat you as if you are ours, our industry. Yes. Chalo. So a lot of steps will be taken. There is especially something called as anti-dumping duty and safeguard duty, which government will levy in extra on import goods, which is causing problem for domestic industry. So that the cost of imported goods will shoot up. Not everyone can buy it. Not everyone can buy it, guys. Okay. Prevention of smuggling, that is illegally bringing the goods into India or taking outside India and all. They will have various measures for it. Then conservation and augmentation of foreign exchange. Guys, in economics and all, you would have studied that we need to bring a balance between import, export and all. Why, sir? Because, guys, especially India, we are highly dependent on import, especially for countries like China, USA, Russia and all. Now, over a period of time, government is trying to reduce that dependency. We are trying to cut down the imports. Sir, how? You know, Atmanirbhar, that is one of the strategic move by the government, telling, please use our own products. Please use our own products. Now, our own people telling our country should improve, country should go there, that, and using foreign products, how will we improve? Correct. Now, how will India grow? Money will go to where? Not Indian government. Will not come to Indian economy. Somewhere it will go. Someone sitting outside India is making money from India. And Indian population is a blessing for any business. Clear? Because many foreign players feel that we can sell anything in India. We can sell anything in India because people are ready. People are ready. And population, we have almost 150 crore population. Correct. Now, if not everyone one full 150 crore, at least if I target 1 crore people, enough. No, very good business. Anyone can do a business. That is where actually China, USA and all is fighting to do business in India. They're in conflict and obviously they have a lot of market share in India. Especially in electronics, China is a market leader. Even though our domestic players are not able to compete with them. And you know, mobile manufacturing, I don't know why. If possible, actually what happens? No, if big players have to enter that market and disrupt it completely. The big players might be Ambani, Adani or Tata Group or any group like that. If they enter, they will be able to successful. Actually, Reliance is doing, but they're not focusing fully. They are into laptop, mobile phone and all, basic mobile phone and all, they manufacture through Geo, but they're not concentrating fully on it because when the person who is having money power come out and do all these things, no, then we can reduce the dependency. If not, it is highly more than 50-60% of market share, especially in mobile industry, is Chinese guys. Okay. Sure. Now, conservation and augmentation of foreign exchange means bringing a balance between, sir, inflow and outflow of money. Inflow and outflow of money. As on today also, import is only more than export. But government might be taking various measures in order to bring a balance between them. Okay. Next, the difference between rules and regulation. Guys, even in GST and all, we spoke about rules. Various rules was covered. Now, even in customs law, there is rules and regulations. Sir, what is rules? Guys, rules is to support act. We know what is act to know. Whatever is covered in act, main content will be there. But whenever something cannot be told in the act, they tell in the prescribed manner, within the prescribed time. Where is it given? In the rules. Now, regulation is to support rules and act both. Understanding? I repeat. Sir, rules is to support act. Wherever there is no clarity in the act or wherever everything cannot be covered in the act, they will give reference to what? Rules. And regulation will be playing a supporting role for both rules as well as act. Is that clear? Yes. Regulations is like simple, putting conditions, telling, sir, this is what you are supposed to follow. That is what you are supposed to follow. You are importing the goods, then you follow these regulations. You are exporting the goods, you follow these regulations. Like that. In simple, the procedural compliance. Okay, chill. Let us see. The difference between rules and regulations I have given. They can ask you guys for 4 or 5 marks in the exam. Rules is covered in section 156, whereas regulation is covered in section 157. Power to make rules is with whom? Central government. Whereas, who can make the regulations? CBIC. CBIC, guys. Central Board of Indirect Taxes and Customs. And one more important thing, Pujita, come to the corner. Now, one more important thing is, sir, is customs subsumed under GST? No, no, no. Customs is there even after the implementation of GST. Customs is not subsumed under GST. If you remember, I told this point even in first chapter. Okay. Now, purpose is what? To make rules, to support the act. Whereas the purpose of the regulation is to support act as well as rules, both. Then consistent. Rules, whatever is made, can it be against the act? No, no, no. Rules has to be, what guys? Consistent with the provisions of the act. Same way, regulations should be consistent with what? Act as well as rules, both. It cannot be against the act or against the rules, guys. Content under rules. What is the content? Means for what and all purpose the rules is there. Transaction value. Even in GST, you remember, sir, when value cannot be determined as per section 15.1, what did we do? Referred to valuation rules. Referred to valuation rules. Same way here also. Similar, guys. Similar thing is there even in customs law. Okay, they are told transaction value is some assessable value, provided the supplier and recipient is not related. If they are related, then they are telling refer to the rules. Refer to the rules. So to determine the transaction value or assessable value. Assessable value or transaction value is nothing but the value on which the import duty will be levied or export duty will be levied. Okay. Content. Transaction value, chargeability of accessories and repairs and maintenance, spare parts, detention and confiscation of goods mentioned in the shipping bill of export, but either not exported or exported and subsequently relanded. Means for all this, rules can be there as per the section 156. Next, coming to regulation. What will be the content? The form of bill of entry means what should be the format of bill of entry? There are various documents to be filed by the importer and exporter. What should be the format of it? What should be the format of bill of import, bill of export, shipping bill of export, import, export manifest, form and manner of making application for refund of duty? Means what is the format to make an application for refund of the duty? Then condition for transshipment and removal of goods without payment of duty. Transshipment and all is covered, we will see. Transshipment means simple. Moving the goods from one conveyance to another conveyance. Okay, means in from one ship to another ship, or from one vehicle to another vehicle, or from one flight to another flight, like that. We had learned this even in e-way bill, if you remember, but their e-way bill was from one vehicle to another vehicle, like truck and all. But when it comes to import export, guys, it will be like from one ship to another ship, from one flight to another flight, like that. Okay. And removal of goods without payment of duty, manner of conducting audit of duty assessment of imported and exported goods. So regulations talk about all this. Yeah, this and all, sir, should I mug up the last part content and all? No, at least 2, 3 you remember. Means rules is with respect to what? Regulation is with respect to what? Okay, sure. We'll move forward. Levy and exemption from customs duty. Guys, as I told you, when goods are imported into India, import duty would be levied. When it is exported, export duty would be levied. But does the government has a power to give any exemption? Yes, they have the power to give any exemption. Even in GST, it was like that only. Na? Yes, central government, section 11 of CGST Act gave a power to whom? The government to exempt any goods or services. Same way, section 5 of section 6 of IGST Act also gave power. Using that, government notified the goods and services are yes, which is exempt. Same way here also, government has been given a power to notify any goods or services which is exempt from customs duty. Customs duty means, guys, it includes both import and export. On import duty, on export duty. Both put together, we sometimes call it as customs duty. Okay, yes, don't get confused, sir. Custom is different. Huh? No, both put together is called customs duty. Yeah. Goods become liable for import or export duty when goods are imported into India or exported out of India. Levy is the stage where the declaration of such liability is made and the persons or properties in respect of which the duty is to be levied is identified. If the central government is satisfied that it is necessary in the public interest to do so, it may, by notification in the official gazette, exempt generally, either absolutely or subject to such condition, pre-clearance, as may be specified in such notification, goods of the specified description from the whole or any part of the customs duty leviable thereon. Sir, can they give full exemption or part exemption? Anything. Government will decide. Government will decide. An exemption notification cannot be withdrawn and duty cannot be demanded with retrospective method, guys. For example, sir, an exemption is there for, now assume, import of laptop is exempted. Central government has told no import duty. But all of a sudden today, they want to release a notification telling whatever laptop has been imported from last 5 years, import duty has to be paid. Can they leave it like that? No, sorry. They cannot remove the exemption retrospectively, guys. They cannot remove the exemption retrospectively. Can they remove it prospectively from today? Yes, they can remove it. Hope you're understanding. Prospective is okay, not retrospective. Retrospective means what? Going back. Clear up. Telling, assume, notification has been released on 1st January 26, telling whatever import of laptop is done from 1st January 2025 is liable for import duty. Can they do it? No. because people believed it is an exemption and they have imported. Now all of a sudden, if you ask them, everyone, hey, please pay import duty, it will not be fair on their part. Yeah, section 12 means, in simple guys, central government has the power either to put any exemption or to withdraw any exemption. But when they are withdrawing the exemption, it should always be prospective and not retrospective. Section 12 of Customs Act 1962 is the charging section, which is the basis for levy of tax. As per Section 12, customs duty is imposed on goods imported into or exported out of India, as per the rates provided in Customs Tariff Act 1975 or any other law for the time being in force, guys. Is that clear? So it's just like this. Section 12 of Customs Act is a charging section. Like for income tax, we had charging section 1, general charging section 4, and one specific section for first section under each head is a specific charging section. Same way under GST also. Under CGST Act, section 9 is a charging section. Correct? Whereas under IGST, section 5. Same way under customs, what is the charging section? Section 12, which is the basis for levy of tax. As per the section 12, customs duty is imposed on goods imported into or exported out of India as per the rate provided in Customs Tariff Act. Okay, guys, section 12 is telling the import duty or export duty, the rate will be as per what? Not Customs Act, Customs Tariff Act. Section 12 of Customs Act is telling the rate will be as given in Customs Tariff Act. For rate itself, we have a separate act which is called Customs Tariff Act 1975 or any other law for the time being in force. This can be analyzed as follows. Customs duty is levied on goods where such goods are imported into or exported out of India. Okay. Only when there is import or export, customs duty is applicable. If not, no customs duty. Levy is subject to other provisions of the Act or any other law. Means we should know the entire provision. Telling, because now they will tell import duty is levied on imported goods. But later somewhere they told, no, on these goods, no import duty. So should we know the entire law? Yes. The rates of basic customs duty are specified under the Customs Tariff Act 1975 or any other law. The rate of customs duty is mentioned in the Tariff Act, guys. Even goods belonging to the government are subject to levy, though they may be exempted by notification. Means now if goods are imported by government, is it liable for paying import duty? Yes. But if it is exempt, okay. But just because government is importing any goods, we cannot tell, oh, anything imported by government is exempt. No. Only if there is a notification telling if these goods are imported by government, it is exempt, they will enjoy exemption. Whereas other goods are subject to import duty. Yeah? Yes. Customs Tariff Act 1975 has two schedules. Schedule 1 gives the rate. Tariff rates for imported goods known as what? Import tariff. Whereas Schedule 2, tariff rates for exported goods known as what, people? Export tariff. Clear? Import tariff is nothing but import duty, whereas export tariff is nothing but export duty. The rate of both of this is given in which act? Customs Tariff Act. Sir, are we supposed to know it? No, guys. The rates are not a part of your syllabus. But how to compute import duty is a part of your syllabus. The format is there. We will learn that. But rate, they will only give in the question. If they are not given what to do also, I will tell, don't worry. Okay, guys, see what is covered in your syllabus is import procedure, export procedure, and all is there, but calculation wise on import, because most of the export is tax free, guys. Clear, huh? But still, what is important from calculation point of view is import part. Let us see. Take types of customs duty. Basic custom duty, BCD stands for basic customs duty, is the revenue duty. Others all are protective duties to protect the indigenous industry. Indigenous means what? Domestic Indian players. Schedule 1 defines the rates for import and Schedule 2 defines the rates for export as per Customs Tariff Act, guys. Okay. Guys, there are a lot of taxes levied on import especially. They are telling BCD is only revenue duty. Rest all whatever government is leaving is to protect our people, to protect our Indian industry and the import duty. One by one, please be careful with all this. Once we discuss theoretically, later we will go and understand it as a format, because you will get a numerical question on this. In actually indirect tax, there are very few numerical area, guys. And if any question is asked on that, try to maximize your marks there. Okay, for example, in GST, what are the areas? Value of supply. Value of supply also just plus minus game there. That's all. Very easy. Then coming to GST liability calculation. How much has to be paid through cash ledger? Or sometimes they will ask only output tax calculation, only input tax calculation. Or else they may ask all three. Output tax, input tax, and ultimately how much has to be paid through cash ledger. Clear? Yes, sir. Yeah, first one. Basic customs duty. Leave it as a percentage of value as determined under section 14. Guys, you know, we used to discuss section 15 value of supply. So we will calculate the value of supply as per section 15 under GST. On that, GST rate would be levied, right? Same way, under customs law, we have section 14, where we will determine what? Value. That value is actually called under customs assessable value. Assessable value. So we will compute the import duty on what, guys? On assessable value. How to compute this also they have given in the law. We will see that. We will see it. Okay. Could be levied at standard or preferential rates where imported from preferential area as may be specified by the government. So standard rate or preferential rate means listen here. Standard rate means assume guys I am importing tab. I am importing tab. They have told that import duty on tab is 20%. Anyone importing tab has to pay how much import duty? 20%. But preferential rate means, guys, this has been kept only if you are doing import from some specific states, specific countries. Now assume government has told, if import of tab is from Nigeria, then the import duty is 10%. Then only if I am a person in India importing tab from Nigeria, for me preferential rate is applicable. If not, standard rate. Clear? Yes, just to support some countries or to have a good relationship with them, the rates would have been kept lower, but not for all the goods, some selected goods. In that case, if I am eligible for that rate, I am eligible in the sense simple, guys. Only if I am importing tab from Nigeria, I will be like paying tax at what? Preferential rate of 10%. Now, it is whose duty to prove that I am importing the tab from Nigeria? My responsibility. The onus is on me. If not, what is the standard rate? Pushpa, what is the standard rate? 20%. So we need to pay import duty at 20%. Onus is on the person, that is the responsibility to substantiate with the supporting evidence that goods are chargeable with preferential rate of duty. Means if I am paying tax at preferential rate, which is normally less than standard rate, I need to prove that I am eligible for it. Clear? And please be careful, this is applicable only when we are importing from a country which is notified by the government. Which is notified by the government. Next, additional customs duty or countervailing duty. It is equivalent to the amount of excise duty on like goods manufactured produced in India. Guys, you remember in first chapter of GST we discussed when goods are manufactured in India before GST, before it leaves factory gate, we were supposed to pay what? Excise duty. Now, if goods are imported into India, will government get excise duty? No, because it is manufactured somewhere outside India and it is coming into India. We will lose excise duty for it? No. So they told instead of excise duty on the imported goods, we will leave something called as CVD. This is only on import duty. Why, sir? Because these goods are not manufactured in India. If it was manufactured in India, we would have levied what? Excise duty. Now we are losing it. In order to overcome that, we are charging what? CVD. But now, as on today, CVD has been subsumed under GST. So what do we leave? IGST will be levied. But on petroleum products and alcohol, even today, CVD is levied. CVD is levied because if alcohol or petroleum products are manufactured in India, excise duty has to be levied? Yes. What if it is imported? Assume, sir, petroleum products or in simple petrol, we are importing from Russia. Is it manufactured in India? No. So on import of petrol, will CVD be levied even today? Yes, it will be levied. Yeah. Under the GST regime, this duty is subsumed under GST and IGST is payable on assessable value plus basic customs duty. Okay, IGST is levied today because there is no CVD. But CVD is there on which GST is not applicable. On which GST is not applicable. Which are those guys? Alcoholic liquor for human consumption as well as petroleum products, PhD man. In case of alcoholic liquor for human consumption is imported into India, the same is still under the state excise, which has not been subsumed under GST. Therefore, IGST is not leviable on the same. What will be levied on that? CVD. Next, In case inwards taxable supplies are in the nature of imported goods which have been taxed and have been consumed in the manufacture of outward taxable supplies, input tax credit is available to the extent of IGST paid. Simple. Sir, I have imported the raw material on which I have paid IGST. Now this raw material is used to manufacture my output. I am selling output on which again I am liable to pay GST. GST. Now whatever IGST I paid on import, can I claim a ITC of it? Yes, it is eligible. Clear in simple, on import of anything which is input or input service, if I have paid IGST which is used for business purpose, can I claim a credit? Yes, if I have satisfied all the conditions given under section 16. Yeah, next. Additional duty or special additional duty, SAD. It is to be levied to offset the sales tax or VAT. Now, again, state governments used to tell customs duty is the revenue of central government. Okay. Now, state government used to tell what will he get. Now, if goods are manufactured and sold within the state, we used to get VAT. Now, these are coming from outside India. Give us something also, no? States are telling, give us something also. So, what government is to do is, central government will get BCD. They will also get CVD. What will states get? SAD. We should give something, at least a small part to states also. Because simple. Assume there was no import. Goods was sold within the state. States used to get the revenue, VAT, or central sales tax. But now they are not getting it. Why, sir? Goods are coming from outside India. In that case, they told over and above basic customs duty, over and above CVD, we will also levy SAD. But as on today, SAD also has been subsumed under GST. It is used, it is to be levied to offset the sales tax or VAT which was there before implementation of GST, guys. However, this has now been subsumed under GST and SAD is leviable only on imported goods for which GST is not applicable. Example, petroleum. Clear? Even today, SAD is there, but only on the products which are imported on which GST is not applicable. Whereas, assume we have imported laptop or tab on which GST is applicable. Will CVD and SAD be levied? No. What will be levied? IGST will be levied. IGST will be levied, guys. I have given it here. Then why did you give the above things, sir? As on today, it is not relevant. Yes, it is not relevant, but for few selected product, it is applicable, no? So we should know it. So instead of CVD and SAD, now what is levied, guys? Under GST, IGST. The goods imported into India are now subject to IGST and not CVD or SAD. However, petroleum is outside the scope of GST. Hence, CVD and SAD are also applicable to them. Simple. If it is alcohol and petroleum products, it is basic customs duty, CVD, SAD. If it is other than that, basic customs duty plus IGST. Or if it is a luxury goods and all, even cess can come. Even cess can come. As per section 3, subsection 7 of Customs Tariff Act 1975, any article which is imported into India shall in addition be liable to integrated tax, that is IGST, at such rate as is leviable under section 5 of IGST Act 2017, charging section, on like article on its supply in India, on the value of the imported article as determined under section 3(8) of Customs Tariff Act 1975. Simple, guys. Sir, what is the rate of IGST? If the same product is sold in India, what is the rate? Assume 18%. Even on the import, 18%. And please be careful, IGST is over and above basic customs duty. Basic customs duty is there even today, na? Yes. IGST is replacing not basic customs duty. It is replacing CVD and SAD. Clear? Yes. IGST is now payable on assessable value plus basic customs duty. Clear? For example, assume, guys, assessable value is 10 lakh. Assessable value is 10 lakh. Plus on that, basic customs duty. Assume at 20%. So it comes to 2 lakh. Now, on 12 lakh, IGST will be levied. Assume IGST rate is 18%. 18% will be levied on what, guys? 12 lakh, not 10 lakh. Actually, it will lead to tax on tax, but still, government is doing this only. Why, sir? Simple. To increase the cost of imported goods. To increase the cost of imported goods, indirectly, they are discouraging it. Clear? Because obviously, when they make the imported goods costly, every people may not be able to afford to buy it. Clear? So, through this, they are discouraging import. There are not lot many other taxes also. This is just a sample. We have a lot of other things also. Next, can cess be levied? Yes, but not on all the products. Only on some selected products. I told you, even in India, if cess is levied, it is levied on only luxury goods and sin goods. Same way, sir, if luxury goods or sin goods are imported, will IGST plus cess both will be levied? Yes, both will be levied. Any article which is imported into India shall in addition be liable to goods and service tax compensation cess at such rate as is leviable under section 8 of goods and service tax compensation to states cess act 2017 on the like article on its supply in India on the value of imported article as determined under section 3 clause 10 of customs tariff act 1975. Section 3(9) talks about this of Customs Tariff Act. Okay, simple guys. Now assume on luxury car, the cess in India is 50% on luxury cars. Now assume this luxury car is imported. What is the cess rate? 50%. 50%. Actually, especially on luxury items and all, cost will go up to double. Assume the seller is actually importing, I mean, sending the goods to India for 1 lakh. By the time he sell, it will be more than 2 lakh. More than 2 lakh. Why? Including tax and all. Import basic customs duty would be there, IGST would be there, even cess will come. And moreover, if there is need, government will also levy anti-dumping duty, safeguard duty and all. Okay. Next, protective duty. In order to protect any industry established in India, a duty may be imposed on imported goods on the recommendation of Tariff Commission. So if Tariff Commission refers or if it recommends, then to protect the domestic industry, over and above whatever we have discussed, can government also levy protective duty on the imported goods? Yes, they can levy. Next, social welfare surcharge on imported goods. Guys, this is applicable on all imported goods. Pushpa, be attentive. Huh? Where are you seeing? ಅವ್ರಿಗೆ ಮಾಡ್ತೀನಿ ಅವ್ರಿಗೆ ಇಂಟರ್ ಅವ್ರಿಗೆ ಚಲ lot of distractions they are creating. Chalo, it is a duty of customs levied for the purpose of union, that is central government, on the goods imported into India, specified in the first schedule of Customs Tariff Act 1975. It is levied at 10%. Lavanya, it is levied at 10% and collected by the central government under section 12 of Customs Act. Guys, the rate is same, 10% all imported goods. But 10% is on what is important. 10% is on what is important. It is actually 10% of basic customs duty. Basic customs duty is on what? Assessable value. Whereas this social welfare surcharge is 10% of basic customs duty. Oh, we will see calculation format I will give, don't worry. But please be careful, this is on all the imported goods, fixed to. Even if question is silent, should I apply this? Yes. Even if question is silent, I need to update this. Update this in the sense, we need to calculate. It is not applicable on safeguard duty, countervailing duty, anti-dumping duty, IGST and GST compensation cess. Okay. Social welfare surcharge is not applicable on all this. It is applicable on what? Basic customs duty, BCD. BCD. Okay. Next, road and infrastructure cess on imported goods. Okay. Not on all imported goods, only selected is there here. It is levied as duty of customs at 8 rupees per litre on motor spirit, that is petrol, and high speed diesel, HSD, imported into India for the purpose of financing infrastructure projects. So if petrol or diesel is imported into India, over and above whatever we already discussed, even road and infrastructure cess will be levied. Road and infrastructure cess will be levied. At what amount? Not rate. It is not a rate. 8 rupees per litre. You will be wondering sometimes, whenever the petrol rate or diesel rate and all, why it is so much? We are not importing petrol, diesel at so much rate. Taxes are actually heavy. Taxes are levied by central government also, state government also in tight competition. Nan kamina, neen kamina. Okay, that is why all this petrol. And moreover, for petrol, diesel and all, we are highly dependent on foreign countries. Highly dependent on foreign countries. So they are exporting. Okay, but whatever price we are paying here now in petrol pump, is that the price which is going outside India? No, no, lot of taxes are levied on that. And it is a basic necessity. Even government know that how much ever price we increase, people will use it. People will use it. One day, 2 day, even news channel will show that this and all. They will ask people opinion. Sir, what your opinion, sir? Yesterday 100 rupees, today 102 rupees anta. ಆ 2 ರೂಪಾಯಿ ಉಳ್ಸಕ್ಕೆ yesterday night only people will be standing in queue. Ah, sure. What and all will happen. Anyway, anti-dumping duty. Anti Allah. Anti. Anti-dumping duty. Listen here. Sir, this is levied not on all the goods. Sanya, not on all the goods. Only on those goods which are imported into India using India as a dumping yard. Clear? For example, listen, China has manufactured lot of products in China, but they are not able to sell there. They looked into India, so much population. Let us go and sell there at very less price. Very much less price, they thought. And they're trying to come and dump their products into India at a very reasonable price or very low price. Will this impact our domestic players? Yes. So what we will try to do is, we cannot ask, hey, China, don't do that. Anta. What we will do is, if at all if you try to do it, then we will levy anti-dumping duty for your product. Anti-dumping duty means part of import duty only, yeah? Yes. Whatever we saw above now, all this will be there. Over and above anti-dumping duty. By doing this, what government is doing? First thing, they are earning more revenue. Second thing, they are increasing the cost of the product. When they increase the cost of the product, it will discourage the people to buy it. Clear? And also, they're indirectly supporting our domestic player. What happens? Simple, guys. Assume, listen. Ah, now I will just give an example of China. China is selling their product in their country for 100 rupees. Same product they're bringing into India and they're trying to sell it at 60 rupees. 60 rupees, guys. In that case, what happens? No, there is a margin of dumping. There is a margin of dumping. How much, sir? 40 rupees. Normal selling price there, how much, people? 100. Whereas here they are exporting it for how much? 60. So, margin of dumping is 40. We will charge this as a anti-dumping duty. Now, automatically the cost of the product will increase by how much? 40. Not only 40, it will increase by 40 plus basic customs duty, IGST, and if cess is applicable, cess also is there. Plus social welfare surcharge. What did government do? Full achievement. They made the product price to be more than 100 now. More than 100. Are you understanding? They are trying to sell it here at 60. So we leave it anti-dumping duty 40. Now total became how much? 100. Plus basic customs duty, IGST, cess, social welfare surcharge. We made the product costly. We made the product costly. Seller might be selling it at lower price, but government made the price more, and indirectly they are discouraging people not to buy it by making it costly. Okay, sure. Anti-dumping duty is a duty paid on import of goods into India at lower prices. It is levied to promote what? Local industry, local players, and to curb imports, and to ensure that India is not used as a dumping ground, which could otherwise have serious repercussions on the economic growth of the nation. Because what happens? No, they will destroy all the domestic players. What these foreign players will do is they will destroy all these domestic players. Tomorrow, when there is no domestic players, they will start playing their game. Correct? Huh? Today, whatever is sold at 100 rupees, tomorrow, if they make it 200 also, there is no substitute product for it. I have to buy. I have to buy it. Do you remember what the telecommunication industry happened? Geo. They gave everything free, destroyed the competition, completely destroyed, killed the competition. Now you know how much they are charging. Both Airtel and Geo is in competition every month or every year, keep on increasing. And for them, 1 month means not 30 days, Deepishri, 28 days. Seriously, 28 days ಅವ್ರಿಗೆ 1 month plan ಹೇಳ್ತಾರೆ 28 days. Correct? And they will tell 3 months plan, they will tell 80 days. 78 days, something and all. 1 year plan they will tell, but 350 days. Clear? And one day, two day also will have lot of value for them. Assume they will tell 1 month plan, but giving only 28 days. Remaining 2-3 days we are losing. For that, how much crores they will earn, crores together. For me, might be 10 rupees, 20 rupees, or 100 rupees. Like that, how many crores of people are using telecommunication SIM? Just imagine. And you mark my words, there will be a days where we will pay for recharge in thousands. Now it is in hundreds. it will be in thousands. You know the strategy played there. Did I talk about this? You know the strategy played by the players here. Okay, anyway, money power was there. That is why, because any person cannot come and tell, I will give freely. Clear? Only who has money power can destroy the competition. So there were a lot of competition, guys. Actually, in telecommunication industry, there is something called as BD, BD, AD, BJ, AJ. ಅರ್ಥ ಆಗ್ಲಿಲ್ವಾ? ಓಕೆ, ಐ ವಿಲ್ ಟೆಲ್ ಯು. ಬಿಡಿಸಿ ಹೇಳ್ತೀನಿ. ಆ BD, AD, BJ, AJ. DJ ಅಲ್ಲ, BJ. Listen here. BD means before Docomo. Before Docomo. Guys, before Docomo, there were players like Airtel, even what is that government company? BSNL, they were and all is there. And you know, even for incoming call, it was charged. And outgoing and all, even if you tell, you call, hey, Elidya Macha, cut 1 rupee to cut. Seriously, one call, 1 rupee, one call, 50 paisa. It was like that. Correct? People were looting, and many people, Indians, you know, especially mother, okay, she will give a call. Okay, when it was charging, she used to give only miss call. Now call. During that time, only miss call. ಅಂದ್ರೆ ಹಸ್ಬೆಂಡ್ ಎಲ್ಲಾರು ಇರ್ಲಿ, ಒಂದು ಮಿಸ್ ಕಾಲ್ ಬಂತು ಅಂದ್ರೆ ಟೈಮ್ ಆಯ್ತು ಅಂತ, ಟೈಮ್ ಟು ಗೋ ಟು ಹೋಮ್ ಅಂತ. ವೈಫ್ ಇಸ್ ಟು ಗಿವ್ ಮಿಸ್ ಕಾಲ್, ಅಂಡ್ ಇಫ್ ಬೈ ಚಾನ್ಸ್ ಇಫ್ ಹಸ್ಬೆಂಡ್ ಪಿಕ್, ಫುಲ್ ಬ್ಲಾಸ್ಟಿಂಗ್ ಅಟ್ ಹೋಮ್. Because outgoing call, even if you pick 1 rupee cut, per call it was charged. In simple, per call it was charged, guys. And obviously people didn't have an option, and very few people were using mobile and all, but still it was charged. Later came Docomo told, 1 second, 1 paisa. We will charge only 1 paisa for 1 second. And lot of youth got attracted. Lot of family members, that like domestic people also, like housewife and all, they started converting, because for them it is not a tough task to change the SIM. Sir, Airtel I had, throw it, start with Docomo. Change the number, no problem. But if it is a business officials and all, they cannot easily change the number. Only option they had was porting. Yeah. So most of the youth got shifted to Docomo. Now all other players also were forced to bring this plan. Later, even Airtel, BSNL, everyone started implementing this plan. 1 second, 1 paisa. Everyone brought this plan. Okay. That is one shift which happened in telecommunication industry. And after this, it was a gold mine, guys. Telecommunication industry was a gold mine. Many people found a business in this. And before Jio entered, there were many players in telecommunication industry, including Docomo, Aircel, Uninaro, that too, this number of companies were there. They were looting the people like anything. Why? Simple. You want to message? Message pack. You want a call? Call pack. You want data? Data pack. Everything was separate. And message pack and all, 100 SMS, 1 pack. Data, 1 GB pack. 1 GB people used to use for 1 month then. ಈಗ ಪಾಪ ನಿಮಗೆ ಸಾಲಲ್ಲ 1 GB. ಅಯ್ಯೋ ಸರ್, 1 GB ಮಾರ್ನಿಂಗ್ ಖಾಲಿ ಸರ್. Seriously, before all these things, people used to use 1 GB for 1 month. 1 month plan it was. 1 GB recharge separately. Clear? Then came our Motabai. Told free. Take everything free. Only SIM also free. Give only your ID. Initially, when Jio he came and introduced this free scheme, people used to stand in the queue. Okay, in front of that Reliance Digital and all, long queue used to be there. For SIM. Okay, and SIM they used to give for one Aadhaar card and all, 5 SIM and all they used to give. Now, obviously people are like, ನನಗೂ ಬೇಕು, ಫ್ಯಾಮಿಲಿಗೂ ಬೇಕು, ಎಲ್ಲರಿಗೂ ಒಂದೊಂದು ಬೇಕು. ಆಮೇಲೆ ಅವರಿಗೆ ಒಂದು ಬ್ಯಾಕಪ್ಗೂ ಬೇಕು. Now, when Jio came, everything they offered for free. SMS to call, data, everything is free. People use this opportunity crazily, and the major shift happened to smartphone. Even who are using only basic mobile phone, Pushpa, started using smartphone. Correct now, Lubna? What you are using there now? What are you using there? What Srushti is doing? Signature. Signature ಒಂದು ಇಂಪಾರ್ಟೆನ್ಸ್ ಹೇಳ್ಬಿಡ್ತೀನಿ. See, now your signature might not have any value. In bank and all, it might have value. But One day when you sign, it should be called as audited. Your signature should have an impact so much that people will believe, yes, I can trust is important. It is important. Okay, coming back to BJAJ, Tuesday, Geo came and completely destroyed the competition. And many telecommunication players shut down, guys. Where is Aircel today? Where is Uninar today? Where is Docomo today? Okay. Docomo got sold, okay, but still only two major players are there even today. Only two major players. What are those? Jio and Airtel. Other players, Attukuntu Lekkakila is there. Okay, that is Vodafone and BSNL. They are trying to come back. Hope they will come back because government, we should always support country. Yes, but still little here and there struggling is there. But two main players are Jio and Airtel. Now you see they started freely. Who? Jio. Now both are in competition. And just if you see 2 3 years back, the plan was different, and now the plans are different. Every now and then, 50 rupees, 100 rupees jump will happen. 50 to 100 rupees. They will not straight away go to from 300 to 1000. 300, they will make it 350, 400, 450, 500. And now they have made it so much addictive to internet. Without internet, people cannot live. Correct. Tomorrow for 1 GB they charge 1000. Srushti. Will you stop using? Definitely not. Time will come. May not be immediately tomorrow. Time will come for that also. Clear? Because now once people become addictive for it, they charge money. They know how to make the money out of it. You know, even this IPL telecasting and all, they wanted to grab the market there also, completely destroy the sports. Okay. Hotstar was the player there. Now they have acquired them also. So in Geo, they wanted people to download that app and start using it. They offered it free. But obviously, obtaining the telecasting right was not free. They paid huge crores. But they told people, you watch freely. I know how to take money. Later I am there. I will know. I am Pakka businessman. I know how to make the money. Now you use. Later, now they started premium, no? Yes. And if you don't ask for premium, they will show the advertisement in such a way that, sir, bad. Like that only. If you don't choose for premium, only premium allo category ಇದೆ. Okay, now gold premium, silver premium, that premium, this premium and all. Now, if you pay basic premium and you take, advertise will come in between. No, sir, movie has to be watched at a stretch. No advertisement, no break in between. Now, if you pay more, they will tell no ad in between. Okay, that is how people will do business. ಸೃಷ್ಟಿ ಜಾಸ್ತಿ ಆಗ್ತಾ ಇದೆ ಅಲ್ಲಿ ನಿಮ್ದು. ಚಲೋ ಸೇಫ್ಗಾರ್ಡ್ ಡ್ಯೂಟಿ. Safeguard duty also is levied on import only. Anti-dumping duty also is on import only. Safeguard duty is also on import only. But when there is a slight difference. When is it? There is a slight difference. We will see. And I have also given the example here. Did I read that? Okay, let me just read it. Anti-dumping duty. Anti-dumping duty is a duty paid on import of goods into India at a lower prices. It is levied to promote local industry and curb imports and to ensure that India is not used as a dumping ground, which could otherwise have a serious repercussions on the economic growth of the nation. So how much will be the anti-dumping duty, sir? You can see there. Margin of dumping is equal to normal selling price. That is, in your country, at what price are you selling it? Minus at what price you are exporting to our country. That is called margin of dumping, guys. This will be levied as what? Anti-dumping duty. Okay. Example I have given there. iPhone sold in India at a lower than US. Actually speaking, when I am paying to buy iPhone, the price is more when compared to US price. But whatever I am paying already includes lot of taxes. Lot of taxes. But if I talk about selling price without tax, then iPhone sold in US and in India there will be a difference. In India it will be less. But actually, when we are buying, we are paying more. I'm not telling it. I'm not denying it. But why is it more? Because of duties. Because of duties. More of, as it is like imported and a lot of duties will be levied. Lot of duties will be levied, but they have started manufacturing iPhones and all in India. But anyway, I've just given it as an example. Don't literally connect, sir. What is the price there? That, oh, what is the difference and all? I've just given it as an example here. Here also, lot of Chinese players can be covered. Okay, where you are selling your goods there at lower price. whereas sorry, higher price, whereas in India you are selling it at lower price. Oh. This anti-dumping duty is continued even under GST regime. The central government levy anti-dumping duty not exceeding the margin of dumping, guys. So maximum anti-dumping duty is margin of dumping. Now in my example, margin of dumping came to 40 rupees, correct? Can government levy less than 40? Yes. 20, 30, 35 they can levy. But can they charge more than 40? No, not possible. Next, safeguard duty. The central government may impose safeguard duty on specified imported goods if it is of the opinion that the goods being imported in large scale and they are causing injury to the industry in India, in simple, Indian industry. Guys, this is slightly different. Please be careful. Now listen. China is selling their electronic goods in India. And at what price? Assume the selling price in India is 1000. Similar product is manufactured in India also. But for Indian players, the manufacturing cost is not 1000, it is much more than that, 1500. 1500. Sir, Indian manufacturers are manufacturing same product which Chinese are manufacturing, but here cost is 1500. Whereas Chinese companies are offering that product in India only for 1000. So if India want to protect their manufacturers, what should they do? What should they do? One thing, they have to give subsidy for them, for manufacturers, or else increase this price. Increase this price. How? By charging more tax. By charging more tax. Assume they are charging this safeguard duty 500 rupees. So automatically now cost will go up to how much? Our selling price will go up to how much? 1500 in India. So that I will encourage even the domestic manufacturers to compete with foreign players. Is that clear? Yes. And you would have seen DeepSeek, the name DeepSeek. Clear? What happened? No, especially US government invested crores together, like months together, to develop AI system, to develop a AI infrastructure, AI in simple artificial intelligence. But Chinese company came out with by just investing few crores with the same technology which the US has developed, but just by investing only few crores. Lot of difference were there. That is through a DeepSeek, if you know. That is only one of the AI company. In that case, what happens? Will this disrupt the entire industry? Yes. Now people have invested on same technology, billions together, billions dollar together. Whereas one company came up and told, I have developed the same technology only at this much cost. So they will provide these services at very less price. At a very less price. So people will completely shift towards whichever they are getting at a less price. Correct? In that case, what happens? How will I protect my players? How will I protect my domestic manufacturers? That is where government have all these powers. They have the power to levy what? Safeguard duty. I repeat, please be careful. Anti-dumping duty is different. Let me tell again what is anti-dumping duty, guys. A company is selling the product in their country for 100 rupees, whereas same product is sold in India for 60 rupees. We are not comparing with other manufacturers. Same company is selling same product in their country for 100, in India for only 60. So we will levy anti-dumping duty equivalent to maximum how much? 40. Now coming to safeguard duty. What is safeguard duty? Guys, a foreign player is coming and selling their goods in India. Similar good is manufactured by Indian manufacturers, but a manufacturing cost is high. Manufacturing cost is high. Now, how will I make this domestic manufacturer to compete with that foreign player? What should I do? One thing, I have to give incentives or grant to this person, domestic manufacturer. Another way is increase the cost of imported goods by levying more and more tax. That is one way of levying safeguard duty. Safeguard duty, who am I safeguarding? My domestic players or domestic manufacturers. Safeguard duty is a duty paid on import of goods into India. This is levied on goods imported into India when such goods are already manufactured in India, but the manufacturing costs are higher as compared to import prices. It is levied to ensure that the Indian manufacturers don't suffer owing to import of cheaper goods from outside, and therefore aims to create a level playing field Level playing field means I am making my domestic manufacturer to compete with whom? To foreign players. Okay. Level playing field for Indian manufacturers and importers, thereby with the intent of safeguarding the national interest. It is important to protect domestic industry where increased imports have caused or threatened to cause serious injury to domestic industry. Simple guys. Now assume there is a domestic manufacturer who is manufacturing the same product which Chinese company is manufacturing. Now Chinese company is able to sell this only for 1000, whereas my Indian manufacturer is priced as 1500 because cost itself is 1500. Obviously, he cannot sell for 1500. Assume is selling it at 1800. Who will buy? People are not willing to buy it. Now one or the other day he might reduce the selling price. He start making loss. At the end, what will he do? Liquidate. Liquidate. Stop the business. So if we do this, then there is no growth for Indian industry, Indian manufacturer. So government has to take few steps in order to protect our people. That is where they are living safeguard duty. One example I have given you: electronic gadgets imported into India from China at a lower price than in India, and Chinese are well known for it. They are manufacturing all electronic products at very reasonable price, and they are selling into India, whereas Indian manufacturers are not able to manufacture the electronic gadgets at that price. At that price, if you have observed, you go to any showroom, especially to buy any electronic products, you will compare one product with another product. Same features will be there for Chinese products, but cost is less. Cost selling price is less. Correct. And think about that, sir. On that, even the safeguard duty is levied. Cost is there. Basic customs duty is there. IGST is there. Over and above that, price is lower. If government doesn't levy all this, then how much will be the price? Imagine. Clear? Even after charging all this, the price is so much. Okay. The main difference between anti-dumping duty being, while the anti-dumping duty prevents the predatory pricing measures or discriminatory pricing, anti-dumping duty is preventing what, guys? The predatory pricing. Predatory pricing means discrimination. Same product you are selling in your country at a different price, in our country at a different price. Who can we accept it? Discrimination. Or that could be unfair for the local goods and markets. Whereas safeguard duties promote enabling a fair ground for what? Local manufacturers. Okay, we will try to support the local manufacturer to compete with the foreign players. Okay. Then there was also something called as health cess. In income tax also we have something called as health and education cess at 4%. No? Similar to that is there even in customs, but not on all the goods. Finance Act 2020 has imposed a health cess on import of medical equipment classified in 4th schedule for augmenting and financing health infrastructure and related services. Silent features are as below. The applicable rate is 5% on assessable value of the imported goods. Okay, so it is 5% of assessable value on what? Imported goods. Any imported goods? Huh? No. Medical devices which are exempt from basic customs duty would not be subject to health cess. And credit of health cess is not available to the importer. Can you claim a credit for it? No. This is not a part of GST. Clear? And this is applicable only on medical equipments, guys. Import of medical equipments. But on any medical devices, if basic customs duty is exempt, then even health cess is exempt. Even health cess is exempt, guys. Yes. Next, classification and valuation of import and export goods. Classification enables categorizing the goods into groups, subgroups in order to apply a single rate of duty on each group or subgroup. This classification is based on the concept of what? HSN, that is Harmonized System of Nomenclature. Guys, did we hear about this even in GST? Yes. But there also connection was there for customs, if you remember. Whatever is taken under customs, same thing is followed even in GST. HSN is an internationally accepted coding system, and the same was formulated and thereby enunciated under a General Agreement and Tariff on Trade, in short, GATT. Customs Tariff Act. Guys, we need to see the HSN code of the goods and all. So that and all is not a part of your syllabus, but classification we have learned in GST, no? Similar classification is there even under the customs. Okay. The rates for customs duty along with the classification groups, subgroups are laid down as under. First schedule will give the import rates. Second schedule will give what, guess? Export rates. Okay. Valuation for customs duty. This is important. Means, sir, we learned basic customs duty and all is applicable on what? Assessable value. Now, what is assessable value? How to determine that and all? We need to enter. Important parts. Clear? In GST also, we had something called as value of supply. Under section 15, similar to that, we have something called as assessable value for customs purpose. Assessable value for customs purpose, or we also call it as transaction value. Okay. Valuation for customs duty. Valuation for customs duty begins with determination of transaction value. Okay. What is transaction value? Transaction value includes the price paid or payable as a consideration. In case of transaction between related parties, sale transaction would be examined to ascertain the influence of relationship on declared value and whether the same could be accepted as transaction value if it is at arm's length price. You know what is arm's length price? It is a price decided between two unknown parties or unrelated parties. For example, I want to sell my goods to you. We both are not related. At what price will we sell? Without one influencing the other. I am not influencing you, you are not influencing me. What is a fair price? That is called as arm's length price. Okay. Before I talk about it, guys, section 15, subsection 1. What is value of supply? Transaction value. What is transaction value? It is a price which supplier is charging for recipient. And price is the sole consideration. Supplier and recipient is not related. Supplier and recipient is not related, guys. Yes, sir. This is called as transaction value. And if any one of this is missing, then we need to refer to what? Valuation tools. Similar thing, guys. Similar here. What is the value on which customs duty is applicable? Transaction value. What is transaction value? It is a price paid or payable as a consideration. And the supplier and recipient should not be related. Sir, if it is related, then obviously the price will be influenced, guys. Price will be influenced by what? Relationship. In that case, we need to check, is it at arm's length price or not? If not, we need to refer to what? Rules to determine value. To determine the value to levy import duty. Okay, sir. Parties are said to be related. Means, in case if the parties are related, we cannot take transaction value, right? Yes. When can we tell parties are related? Guys, do you remember? Even in GST, we discussed as per explanation to section 15, who is related person? Who is related person? I had covered it when I was doing schedule 1. Schedule 1, para 2. Correct? Yes. But here, this is a related person for customs purpose. Okay. Similarity is there, but not same to same. Similarities are there. Okay. What are those? They are the officers or directors of each other business. They are legally recognized partners in the business. They are employer and employee. Okay, all these were covered even under GST. Yeah? Related persons? Yes. Next, any person hold directly or indirectly more than 5% of voting rights, shares in the other. One of them directly or indirectly controls the other, where both of them control or controlled by same person. Guys, similar provisions we had even for related persons under GST. If you want, you can go and refer back that. Para 2 of schedule 1. There we had spoke about what? Related person and the distinct person. Clear? And their control also was there? Yes, sir. Yeah. I had given these examples when I was explaining the related person under GST, guys. I have taken the same here. You can see if A is controlling B or if B is controlling A, are they related people? Yes, they both are related. Same way. Sir, A and B together are controlling C, sir. A and B together they are controlling C. All three people are related, huh? Yes. A and C related, A and B related, B and C is related. All three. Same way. Sir, Z is controlling X and Y. One person controlling two person. X and Z related, huh? Yes. X and Y related, huh? Yes. What about X and Y? They are also related because controlled by one common person. Controlled by one common person. If you had remember, I had given one family example also. This is actually not how it is covered in the law. I have just given an example. What was it? Father controlling mother. Mother controlling father. Sir, are they related? Yes. Now father and mother controlling child. You. Okay. No, sir, I am not under the control of anyone. Allah. No. Father, mother controlling child. Are they all three related? Yes. Now, father and mother controlled by grandfather. Are they related? Yes. They're related. Clear? Yes. But this is just an example. Guys, for control, they need not be blood relative. They can be any person. Okay. Coming back. Coming back. Okay. But please be careful here. Blood relative, they are not covered. Blood relative, they are not covered. Members of same family. Members of same family was there for GST, no? Hello. Members of same family. That is not there here. Sir, where, sir? Who taught, sir? Valuation rules. The custom value fixed as per section 14 is the value that could be used for calculating the customs duty payable. This is also called as what? Assessable value. Assessable value is the value on which we will levy customs duty, guys. Criteria for deciding assessable value is as follows. Price at which such or like goods are ordinarily sold or offered for sale. Okay, means price at which similar goods are sold. Price per delivery at the time of or place of importation or exportation, means at the time of export, what is the price of it, or at the time of import, what is the price of it. Okay, price should be in the course of international trade. Seller and buyer should not be related. Very important point. Price should be the sole consideration for sale. You remember at least these 2 points. We had covered it under section 15.1 also. 15.1 also. Value of supply is a transaction value provided all the three conditions are satisfied. Price is the amount and it should be the sole consideration, and supplier and recipient should not be related. Clear? So if all these conditions are satisfied, we will take assessable value to levy what? Customs duty. Sir, what if any of this is missing? Then we need to refer to rules, guys. You can see here also rules are there. Rule 4, 5 and all is there. We need to refer to it. Okay, but rules we will not touch it today. We will see it in the next class. Okay. Now, for export, what is the value? For import, what is the value? For export, what is the value? For import, what is the value? Listen. Now, Indian map. India, gottala? You know, na? Chalo. Srishti, where are you? No, you're here. Somewhere here, yes. Here in the classroom, sleeping. Correct, Last word you heard? You didn't hear. Okay, leave. Where are you? See, listen here. In Karnataka. In Karnataka, in Tumkur. In Tumkur in class. What are you doing? Chalo. Okay, listening. Okay, fine. Shh. Pay attention. I will explain both. Hey, nimdendra. Pay attention. Listen here. Assume, I am the exporter. I am exporting the goods from India. Now, when it is leaving Indian port, guys, when goods are leaving Indian port, what is the value of that? We need to check. What is the value of that? We call it as FOB, guys. We call it as what? FOB. When goods are leaving Indian port, whatever is the value of that, that is called as assessable value. If export duty is levied, it will be levied on what? Assessable value. What is assessable value? FOB. FOB means freight on board. Freight on board. Simple. Guys, listen here. When goods go and reach the port, that is Indian port, before it leaves the Indian port, what was the value of it? What is the value of it? Now listen. Now from here, who will take care of it? Importer. Assume importer is from foreign country here. Okay, now from here to go for the goods to go there, there is freight expenses, insurance expenses, correct? Yes. When the goods reach here, the cost or the amount will be CIF. CIF. What is that value? Cost including insurance and freight. CIF stands for cost including insurance and freight. Guys, pay attention. Very important. Everyone. I repeat, because this will come reverse again for import. Please understand carefully now. I am the exporter, exporting the goods from India. When goods are leaving Indian port, what is the value of that? Is called as FOB. Now for goods to go from year to year, there should be transportation cost, which we call it as freight. Plus during transportation, especially when it is in international traffic, we will also take insurance. Okay. When goods reach your foreign port, what is the cost of it? CIF. What is that CIF? FOB plus freight plus insurance. Okay. Then the importer will take it to his factory, will take it to his place or warehouse, go down wherever you want. Yes, sir. In his country, he is supposed to pay import duty, right? He will pay it on what value? This value or this value? When goods reached his country, what was the value? CIF. So that country obviously will ask tax to be paid on this value. Hope you understood. Whereas Indian government, if at all if export duty is applicable, they will ask export duty on what value? FOB value. So for export, what is the accessible value? FOB value. FOB value. And FOB value will include all the cost incurred before this. Assume, sir, exporter is here, no, sir. To take the goods from his factory to this port, he has incurred 10,000 rupees, sir, or 1 lakh rupees, sir. Will FOB will include that? Yes. Before the goods leave Indian port, what all value is there? We will take that. We will take that, guys. Hope you understood. This is for what? Export. Now let me talk about. And the Indian government is only worried about this part, not this part. This will be taken care by foreign government. Okay, sir. Now, reverse scenario. Pay attention, very important. All these terms we will solve in the question. In the questions, all these words will be used. If you know the meaning, you will understand what we are doing. Why are we adding? Why are we deducting? If not, blank. Listen here. Assume this is a foreign country. Okay, this is a foreign country. In a foreign country, there is one factory of a exporter. Now there is an importer here who is importing the goods from this factory to India. Getting it up? Yes. Now listen, please listen, important. When goods are leaving factory of the exporter, this is the factory of whom people? Exporter. When goods are leaving the factory of the exporter, whatever is the value of the goods, no, we call it as X factory price. X factory price. When goods are leaving the factory of the exporter in the foreign country, we call it as X factory price. And when it reaches the port, this is the port you assume, okay, foreign port. Whatever value is there, we call it as what? FOB. For that country, it is FOB. Got it? Yes. And in between this, will there be any transportation cost and all? Yes. Guys, here freight cost, loading cost, unloading cost, all might come. Okay. Now, how do we determine FOB value? Simple. X factory price plus all the cost incurred to bring the goods from the factory of the exporter till the port, foreign port, not Indian port, foreign port. Now, goods will move from foreign port to Indian port, foreign port to Indian port. When it reaches here, what is the value of it? What is the value of it, people? CIF. CIF. How will I get it? Simple. FOB value. FOB is at what point? This point. Plus freight and insurance. So how do I get CIF, people? Simple. FOB plus freight plus insurance, which is incurred to bring the goods from foreign port to Indian port. So when goods reach the Indian port, what is the value of it? CIF. Cost including insurance and freight. Did you guys understand? Yes. So when I am the importer, I need to pay import duty on what value? This value. Now in exported country, will the government charge export duty? If yes, it is on what value? FOB value. Is that clear now? You understood the procedure? When goods leave the factory gate of the exporter, what is that value called as? X factory price. And to take the goods from year to year, cost obviously will be incurred. Transportation of freight to transportation freight is one and the same. Okay. Okay. Then loading, unloading, insurance, everything. All this put together. X factory price plus freight, loading, unloading, or any other thing, insurance, everything is called as what? FOB. And to bring the goods from foreign port to Indian port, obviously there will be freight plus insurance. If I add FOB plus freight plus insurance, what do I get? CIF. And there is no way that this will not be incurred. It will be incurred. It will be incurred. Even if question is silent about it, we need to consider. How much we need to consider and all standard percentages are there, we will see. Clear? Huh? Any doubt? Understood. So calculation and all is based on this. Now, if it is export, we need to see when it is leaving Indian port, what is the value? What is that value called as? FOB. When goods is coming into India, we need to look into what? CIF, which is called cost including insurance and freight. Is that clear? Yes. If you understand this math, guys, I told you, I just explained with a rough figure here. Okay, that becomes easy for you. If not, if you mug up, oh, I have to add this for that, I have to deduct this, and all, you will not understand why are you doing it. Clear? Yes. Chalo. Huh. For export, what is the assessable value? Price paid or payable for delivery at the time and place of exportation, which essentially implies that price up to a port in India. Guys, when goods is leaving Indian port, what was the value of it? When goods are exported has to be considered, which is nothing but FOB. FOB, guys. Okay. We call it as free on board or freight on board. One and the same. Free on board or freight on board. Okay. Next, for import. Price paid or payable for delivery at the time and place of importation, which, okay, at the time of importation, which essentially implies that the price up to a port in India, when goods are imported, has to be considered. So up to a port in India. Okay. When goods are imported, has to be considered. So in my example, I have given you, when goods are entering into Indian port or when it reached Indian port, what is the value of it? Nothing but CIF. What is it, people? Value of imported goods shall be a transaction value adjusted in accordance with the provisions of Rule 10, which is nothing but CIF is equal to FOB, the value of the goods when they left foreign port, plus cost of transport, which is nothing but freight and insurance. And guys, whenever we are engaged in import and export, obviously the consideration will be in what? Indian rupees or foreign currency now? Foreign currency. But at the end, when I am paying customs duty or any tax, I should pay it in what? Rupees. So whatever values is there in foreign currency, I need to convert that into Indian rupees. By applying what? Exchange rate. Sir, exchange rate on what day and who will notify this? Is given here. Price referred above shall be calculated with reference to the rate of exchange as determined by the Central Board of Indirect Taxes and Customs, or ascertained in the manner determined by CBIC as on the date of. Okay, means who will notify the exchange rate? CBIC. On what date? Because exchange rate will be fluctuating. It will be changing from day to day. On what day should I take? On the date of presentation of bill of entry in case of import. Guys, if it is an import, importer has to present a bill of entry telling, sir, my goods is entering India, pay import duty, and he can receive the goods. On what day he will file or present the bill of entry, on that day we need to take what? Exchange rate. Same way, if it is an exporter, he need to file a document called quotation, bill of export. Bill of export. Presentation of shipping bill or bill of export in case of export. Is that clear? Please be careful. Ashita. Now, in case of import, we need to take the rate of exchange on what day, Savita? On the date of presentation of bill of entry. And in case of export, the exchange rate as on the date of presentation of shipping bill or bill of export. And what is this document and all, I will discuss later. We have import and export procedure, we will discuss there. Okay, valuation rules we will see later. Coming to the calculation part. This is the numerical area. This is the numerical area where you are getting questions. In exam, questions are asked. We will solve problems, but before that, we will understand the format. Why are you staring like that, Diptishri? Problems and react nodidri henge? Chalo. Valuation terminologies. FOB. Silence. This is also known as free on board or freight on board. One and the same. It signifies the cost of delivering the goods to the nearest port, that is Indian port. And thereafter, the buyer is responsible to ship from there to the buyer's address. Means exporter's responsibility will end when when he reaches the goods to the Indian port. From there, who will take care? The buyer or the importer. So for export purpose, what is the value we need to check it, guys? FOB. That is called assessable value. But for your exams and all, what is important is import. Because most of the time export is tax free. So what they have covered in calculation part is import, guys. What is it? CIF. This is known as cost, insurance and freight value. This would add on to insurance and freight to the FOB value as explained below. Guys, how do we get CIF? Is nothing but FOB plus insurance plus freight. We get CIF. That's all. Format is very important. Be attentive now. Okay. I am discussing the format for import purpose. Export calculation wise, we have seen what is the assessable value for FOB. Assume there is any question. They have told export duty is 20%. What do? Whatever is the FOB value, assume it is 10 lakh into 20%. That's all. Game over. After that, what happens? We are not bothered. Clear? But for CIF, import, format for computation of assessable value and customs duty payable. First, we will take ex-factory price. What is ex-factory price, guys? When the goods are leaving the factory of whom? The exporter. What is the price of it? What is the price of it? For that, we will add all these expenses incurred in foreign country. Yes. Then we will get FOB at foreign port. Then we will add freight and insurance. Yes. Then we will get what is the value at Indian port when the goods reach the Indian port. Yeah. Ex-factory price we will take plus expenses incurred by the seller outside India before exporting. I spoke about that freight, loading, unloading and all. No, those should we add this? Yes. Okay. This is an expenses incurred by exporter in foreign country. Then we will get what? FOB value. For FOB value, we need to make an adjustment under rule 10.1. Expenses incurred by importer or paid to seller. Okay. Guys, simple. Importer has paid some amount to the exporter. Okay, now assume for transportation or anything. For example, assume this amount is charged to the importer. Should we add even in that case? Yes. See, listen. Yeah. If it is incurred by seller and he himself is taking care of that expenses, should we add? Yes. Above only we should add. Sir, these expenses are borne by the importer, sir. Or else, exporter incurred it and asked importer to pay it, sir. Should we still add it? Yes. In simple, importer standing in India, if he has incurred any expenses, we need to add it. Because this will include the value of the goods before it reaches Indian port. Indian port. You remember for value of supply also, if anything supplier is liable to pay, if it is paid by recipient, did we add it to the value of supply? Yes, same story. Okay, sir. Next, customs FOB. We get customs FOB. Okay. And if by chance, sometimes question might not mention about this, guys, ignore. Straight away, this only will become customs FOB. Okay. Next, rule 10.2. Guys, this is important part. Rule 10.2. Rule 10.2. Adjustment under rule 10.2. Transportation, loading, unloading, and handling charges. We need to add it. If question is silent and if it is not given, we need to take what? Customs FOB into 20%. Important. Even if question is silent, should I consider it? Yes. 20%. Of what? Customs FOB. Sir, even this is not given. In that case, take 20% of what? FOB value. That's all. If anything is not given, just keep it. Sometimes straight away they will give this only. Sir, this and all is not given. Straight away start with this. Straight away start with this. That's all. I have given the full format here. Doesn't mean that from A to Z everything will be asked in the exam. Need not be. Okay. When you solve the questions, you will understand. Next, insurance charges. We need to add it. Insurance charges incurred when? Year. That is from foreign port to Indian. Okay. Sir, what if it is not given or if it is not known? Then take customs FOB into 1.125. Customs FOB into 1.125 percentage. Now what do we get, guys? Assessable value. CIF or assessable value. One and the same. Now we need to charge import duty on this song? Yes. Now till now whatever we calculated, guys, you remember in GST also we will calculate value of supply. Later GST. Correct on that. Same way. Now what did we calculate? Value. Now on that what should we calculate? import duties or taxes. What is it, sir? Now I will take this only as a base here. I will take this only as a base in the second step. Clear? Okay. Now on this basic customs duty, guys, if rate is given in the question, apply it. If it is not given, always take it as 10%. Always take it as 10%. Emma, how much? 20%. 10%. Now listen. I repeat. Basic custom duty should always be applied on what? Assessable value. If they have given in the question 20%, 30%, 40%, take it. No, sir, nothing is mentioned. You can take 10%. 10%. Next, social welfare surcharge, always 10%. Fixed to. Fixed to. Even if question is not given, please take this. Even if question is silent. Okay. But 10% on what figure? Basic customs duty. Social welfare surcharge is 10% of what? Basic customs duty. Okay. Next, if at all, if anti-dumping duty or safeguard duty is there, we need to take it. Okay, if it is given in the question. But most of the time, they will not give anything about it, leave it. If they have given, take it. Oh. Next, value. Okay, if I add up all this, we will get value for levy of IGST. Now we will add all this, we will get some value. On that, we need to charge IGST and cess. IGST will always be applicable, but cess only if it is given in the question. Only if it is given in the question, guys. Okay. So IGST, we will leave it on this 18%. See, if IGST rate is given in the question, assume 10%, 20%, 40%, please apply that. If question is silent, take it as 18%. Whereas GST compensation says there is no fixed rate. Whatever rate they will give, take it. Sir, what if question is silent? Ignore. Ignore. Okay, sir. Now, if I add up all these three, what do I get? Total cost of imported goods. Total cost of imported goods. And one important thing, if they ask you what is the total taxes and duties payable, it will be, guys, except this. Except this. Correct? Huh? You can do this calculation in two ways. Take this and deduct this. Because this is not the tax amount. This is not the tax amount. Or else do it in another way. You keep on adding all the taxes. B, C, D, E, G, H. Add up everything. What do you get? Total taxes and duties paid or payable. Hope you're understanding. I repeat. This includes tax plus assessable value. From this, if you just deduct assessable value, you will get what? Total taxes and duties payable. So in simple, I can also tell it as I minus A. If not, add up all the taxes. How is that, sir? B, C, D, E. Don't add F also. G, H. G, H. Got it? Yes. Either way, you get same figure. Same figure. Sir, I am not getting same figure. Hangadre, ಮಾಡಿದ್ರು. ಏನು ಎಡವಟ್ಟು. Okay, na? You can cross check like this. Simple. You take this, deduct this. One second. Take this, deduct assessable value. Or else, if you want to cross check, add all the taxes, Pushpa. Add all the taxes. B, C, D, E, G, H. You will get this. Okay, na? Yes. Now, adjustments under rule 10.2 is there, no? This is important. For this, we have some more explanation. Adjustments under rule 10.2. Cost of transport, loading, unloading and handling charges for imported goods to the place of importation. Important, please listen. Now, mode of transportation. Assume the transportation cost, in simple we call it as freight. Okay, now actual cost is known, given in the question. Actual freight cost is given in the question. What should we do? Check the mode of transport. Is it by air or any other mode? If it is by any other mode, take whatever is the actual cost given in the question, just take and add it here. Just take and add it here. Okay. If it is by air, that means goods is coming by what, guys? Flight. In that case, take actual cost. Compare that with 20% of customs FOB. Whichever is less, we need to take. Whichever is less, we need to take. For example, let me just take an example. Assume, guys, customs FOB is 20 lakh. Actual freight cost they have given and goods is coming by flight. Okay. Actual freight cost they have given it as, assume, 3 lakh. Now, can I add up all 3 lakh? No, they told 3 lakh or 20% of 20 lakh, which comes to 4 lakh. So how much is that? 3. Whichever is less, 3 lakh. Whichever is less, 3 lakh. Or assume. Now I will change this figure. Assume this is 5 lakh. Actual credit cost is 5 lakh. 20% of 20 lakh comes to 4 lakh. 4 or 5, whichever is lower. 4. So how much should I add here? 4. This is only when the mode is air. If it is by ship or any other mode, what should I take? Whatever is the actual cost, straight away add it. This will not come. Means percentage comparison and all will not come, guys. Okay. So please be careful. This is only when actual cost of freight is known and if it is the mode of transport is by air. Sir, what if it is by any other mode? Just take actual cost. That's all. No comparison. No 20% of FOB will come here. Okay. Next. Sir, actual cost is not known, sir. Freight cost is not given in the question, sir. In that case, what should we do? Take 20% of FOB value. Even if question is silent about freight, still, irrespective of mode of transport, how much should you take? 20% of FOB value, guys. Is it clear? Very important. Now, where the FOB value of the goods is not ascertainable, but the sum of FOB value of the goods plus insurance is ascertainable, then we need to take what? Guys, simple. Customs FOB, we don't know. But customs FOB, just a minute. Yeah, FOB plus insurance value is given in the question. Assume it is given as 22 lakh. Then we need to take 20% on what? 22 lakh. First they told 20% is on only FOB. But FOB value is not available, sir. In the question they have given, or in real world also, only FOB plus insurance is available. How much is that? 22 lakh. Take 20% of that. Take 20% of that only. If FOB value is available, 20% of that. Or else, no, sir, no breakup is there. FOB plus insurance is there. What should I do? Take both cumulative, 20% of it. Ah. Next, coming to insurance. Cost of insurance in case of imports. In that case, if actual cost is known, guys, if actual cost is known in the sense it is available, given in the question, what should we do? Take actual cost. Take actual cost, no comparison, nothing. Sir, actual cost is not known, sir. Not given in the question also, sir. In that case, we need to take 1.125% of FOB value. Of FOB value. Sir, what if FOB value is not separately available? FOB plus freight is available. Whatever we saw above, same thing. If FOB plus freight is available, then I need to take 1.125% of what? FOB plus freight. Is that clear? Yes, guys. And remember this percentage. Even in the format I have given it, here you can see. If not given or if not given, how much you have to take. You have to remember this percentage. Because even if question is silent, still should we consider this? Yes, very important adjustments. If you miss out, then wrong. You will lose out marks. Okay. I have just given one simple format here with numbers. Assuming assessable value is 1000 rupees, guys. What is the basic customs duty? 10% of assessable value, which comes to 100 rupees. Then social welfare surcharge will be there. Yes. 10% of what? 100, not 1000. 100. So how much it comes to? 10 rupees. Then assume anti-dumping duty, safeguard duty, they only given in the question 70 and 80. Okay. See, they will give this in the question or they will tell you how to calculate it. Only then you calculate. Sir, if question is silent, just ignore it. Just ignore it. So the total comes to how much? 1260. And this is the value to levy IGST. This is the value to levy what? IGST. Assume IGST rate is 18%. 18% is on what? 1260. 1260. Okay. Then assume even CGST, just cess is applicable. That is GST compensation cess. At what rate? 15%. 15%. So 15% on what? 1260, which comes to 189. Add up everything. Add up everything, guys. Total taxes and duties means what? 100 plus 10 plus 70 plus 80 plus this two, which comes to 675.80. 675.80, guys. Okay. So I have just given the notes also here. You can see BCD is calculated on assessable value. Whereas SWS means what? Social Welfare Surcharge is calculated on BCD. IGST is calculated on assessable value plus all duties. GST compensation cess also is taxable on AV, that is assessable value plus all duties. Okay. See, I will tell you, even if question is silent, what all you should still consider, especially while calculating tax. This too will anyway come. Even if question is silent, still you have to take. Okay, na? Yes. Coming to tax rates calculation, even if question is silent, you need to consider them. This three. Mandatorily you have to consider. If rate is given in the question, consider the rate. If rate is not given, then I have told, for basic custom duty, how much will you take? 10%. Social welfare such as always 10% only for all goods. Then IGST, if it is given, please take whatever is given in the question. If not, 18%. If not, 18%, guys. Okay, sir. Then rate of exchange we discussed already. It is, I have just repeated here. I will just read it once. Relevant date for rate of exchange. Proviso to section 14. Guys, when we are converting the foreign currency into Indian rupees, the rate of exchange is notified by whom? CBIs. On what date? Rate of exchange shall be as determined by the Central Board of Indirect Taxes and Customs, or as ascertained in the manner determined by CBIC, as on the date of. In case of import, on the date of presentation of bill of entry. Who will present this bill of entry, guys? Importer. It is a document to be presented by importer for import of goods. With whom he will file this? Customs authorities. Customs authorities. Next, exporter, or in case of export, the date of presentation of shipping bill or bill of export. Who has to file this? The exporter. With whom? Customs authority. Whenever he is exporting the goods outside India. Is that clear? This document and all we will discuss later, but guys, rate of exchange will be varying from day to day. We need to consider it on what day? On the respective dates. Notified by whom? CBIC. Okay. Sir, what about the customs rate? That is import duty rate or export duty rate. Even that can change, Normally it will not change every day. But once in a while, can government increase or decrease the rate? Yes. If that happens, guys, you remember section 14 of GST, CGST, when there is a change in the rate of GST, we need to see supply is on which side, invoice is on which side, payment is on which side, and all. Yes. But here, nothing like that is there. But if there is a change in the rate of duty, what duty should I take? On what date? And on what date? Relevant date for rate of duty, not rate of exchange. Please be careful. The above was rate of exchange in section 14, proviso to section 14. Whereas this is rate of what? Import duty as per section 15. Okay. Section 15, 1A. Goods cleared for home consumption. Guys, listen. This one procedure I will just tell you. Now, when goods are imported into India, the importer can go directly collect the goods. Can directly collect the goods by paying import duty. Or else, when goods are imported into India, first it will go to warehouse. From warehouse, the importer can collect after paying import duty. So there are two ways. Listen, yeah. Goods came to Indian port straight away. Can importer go and collect it from there? Yes, after paying import duty. Or else, goods will go from here to warehouse. From warehouse, he can receive the goods. Who? The importer. Clear? Yes. 15(1)(a), goods cleared for home consumption under section 46 means without going to the warehouse. Without going to the warehouse, whatever goods is imported, it's taken away by the importer. For home consumption. Home consumption is what? To use in India. Okay. Rate prevailing on the date of presentation of bill of entry or the date of entry inwards of vessel or aircraft, vehicle, whichever is later. Very simple. The date on which the importer presented the bill of entry or the date on which ship or the aircraft entered India. Entered India, whichever is later. On that day, whatever is the rate of duty, import duty, that will be applicable. That will be applicable. Next, goods cleared from the warehouse under section 68 means once goods reached Indian port, it went to warehouse. From warehouse, it is cleared for home consumption for whom? Import. In that case, rate prevailing on the date of presentation of bill of entry for home consumption. The date on which it is bill of entry is presented, that day we will take. No later, no earlier and all. Only one date here. Okay. Last one. In any other case, rate prevailing on the date of payment of duty. Any other case will not come. They have just added it as safety. Clear? Guys, two scenarios were covered. What are those? When goods came to Indian port, straight away it is taken there from importer. By filing what? Bill of entry. Okay. Or bill of import. Next, if not, once the goods reach the Indian port, it is going to the warehouse. As per the instruction of importer only. From warehouse, after the importer pay the import duty, he will take it for consumption within India. Okay. Both the scenarios we covered it. If not, then it is always on the date of payment. Guys, we are discussing about rate of exchange or rate of import duty, na? Rate of import duty. Please be careful. Rate of exchange is different because there is a chances that you will get confused between both. Between this and between this. Sir, rate. What is this, sir? Rate again and again covered. Above was rate of exchange to convert foreign currency into Indian rupees. Whereas this is to calculate. We need to calculate the tax. No. Here, sir, this rate, if it is same, no problem. I will take it. What if there is a change? 10% is increased to 12% or 10% is decreased to 8%. What rate should I take, sir? On what date should I take it, sir? That is what we are discussing. Yeah. Relevant date for rate of duty on exported goods. Section 16. Section 16 1A. Goods entered for export. Okay. For export, only one case. No problem at all. Rate prevailing on the date on which proper officer makes an order permitting clearance and loading of goods for exportation. Guys, when exporter is exporting the goods, first he should request proper officer, I need to send these goods to. Proper officer here is nothing but custom officer, not GST officer, custom officer. Okay. Yes. Now I am asking, assume I am exporting the goods outside India. I am asking the proper officer that, sir, I want to export my goods. He will check all the documents, goods, everything, and he will tell, okay, fine. He will give the approval. On the date of approval, whatever is the date of the export duty, that will be applicable. That will be applicable, guys. Okay. Provisions of both section 15 and 16 are not applicable to baggage and goods imported or exported by post, guys. So whatever we learned, section 15 and 16, no, it is not applicable for baggage. For baggage, we have a separate rules actually, baggage rules. We will see that. Clear? Yes. Shall we see? Yes, guys. Now we have some questions on import duty calculation or assessable value calculation. We'll just do it. We have discussed about the format of computation of both assessable value. I have given the format for both, guys. First part talks about assessable value calculation, whereas second part talks about what? Import duty and other taxes calculations, including IGST and GST compensation cess. We'll solve some question on it. Question number 1. From the following information appended below, find out the assessable value. Okay, what is assessable value? Or for import purpose, we also call it as what? CIF value. Okay. Cost of the machine at the factory of US exporter is 17,500. Where is it, guys? This is the value when the goods were leaving the factory gate of whom? Exporter. Where? In foreign country. Transport charges from the said factory until the seaport for onward shipment. Should we add this? Yes, 2,500. Now what do we get? FOB value at foreign port. Okay. Next, handling charge at the port of shipment. Oh, even this we have to add. Handling charges at the port of shipment means again foreign port. We need to add it. Then buying commission paid to the by the importer. Guys, buying commission paid by importer. Where is importer? In India. Actually, this is not allowed. We cannot add it. As per law itself, we cannot add it. I have given a separate note for it. We will see that. Freight charges until the Indian port. Okay, freight. Should we add it? Yes. Guys, if I add up all this, what do I get? FOB. For FOB, should I add the freight and insurance? Yes. Freight is 2,500. Use an exchange rate of $1 is equal to 63.84. Sir, now almost 100, sir. Whatever is given in the question, please use it, guys. Don't question the question. Please use whatever is given in the question. Okay, sir. Now, sir, what about the insurance? They have not given in the question about insurance. Guys, if insurance is not ascertainable or if it is not given, what should I take? I need to take it as 1.125%. Please be careful. Even if question is silent, should I still consider it? Yes. And question is only to compute assessable value. Only to compute what, people? Assessable value. They didn't ask us to compute any import duty. This kind of question also can be asked. Let us do it. First pay attention, listen, then you can take down. Cost of the machine at the factory of US exporter is how much, guys? 17,500. If you remember, you can connect to the format which I explained. This is the value of the goods when it is leaving the exporter's factory. Plus, to bring it from his place to the foreign port, he will incur some expenses. Should we add it? Yes. Transport charges from the said factory until the seaport for onward shipment. Handling charges at the port of shipment. Should we add both of this? Yes. So what is the FOB value? FOB value in India now, foreign country now. Foreign country when it was leaving the foreign port, 20,200. And I have given the note here. All cost up to the port of shipment, which is nothing but foreign port here, will be included in the FOB value. Okay, sir. Next, insurance charges, freight should be added for it as per rule 10. Okay. Sir, insurance charges is not given in the question. What should we do? Take it as 1.125%. 1.125% of what? FOB value. So 20,200 into 1.125%. Yes, sir. So I have given a note for it. You can see as per rule 10.2, if the value of insurance charges is not ascertainable or if it is not given in the question, then insurance charges shall be taken as 1.125% of FOB value. Of FOB value. Yes, sir. So I need to take 20,200 into 1.125 percentage. Okay. Then actual freight charges. Please be careful, guys. First check what is the mode of transport. It is coming by sea. Obviously, if it is coming by sea, it is coming by ship or flight? Ship. If it is by ship, is there any upper limit for freight charges? No. Whatever is the actual freight charges, we need to take it. If it is by coming by air, there is some limit. What is it? Actual freight charges are 20% of FOB value, whichever is lower. But here no limit. Here no limit, people. Okay, sir. Actual freight charges I am taking 2,500. So actual freight charges of USD 2,500 are included. And even if actual freight charges is not known also, what do we take? It 20% of FOB value. But here it was known, so straight away I am taking it. Next, buying commission paid by importer is nil. Why so? Note number 2. Buying commission is not to be included in the competition, guys. Okay, sir. Fine. So I will get CIF in USD. All these calculations are in US dollar, people. Please be careful. Whatever values they have given in the question is US dollars. Okay. So what is the CIF value in US dollars? 22,927.25. At the end, they have also given the exchange rate. So should I convert it into Indian rupees? Yes. So convert it. 22,927.25 into the exchange rate 63.84 rupees per dollar. So amount comes to rupees 14,63,676. Is that clear? Yes. Fine. Take down, guys. Take down. You can also give an heading computation of assessable value and then take down. Give the heading computation of assessable value. In bracket, you can also write CIF and then take down. Guys, please be careful. If it is a buying commission, we need not add it. This as per law itself. Okay, I have just given it here as a note. Be careful. If it is a buying commission, we will not add it. Sir, what if by chance if it is a selling commission? Should we add it? Yes. We have that in one question. We will see it. But please be careful with this treatment. If it is a buying commission, we will not add it. Okay, fine. We'll move on to question number 2. Miss Nisha imported 2,500 tons of goods and materials valued at $50 per ton CIF value. Exchange rate per notification CBIC was $1 is equal to 63.84 rupees. The basic customs duty was chargeable at 10%, and over and above, there was an anti-dumping duty levied on the goods, which was differential between. Okay, guys, whenever they give anti-dumping duty, they will also tell what is it is levied on what, on the differential between the amounts of calculated as landed value inclusive of basic custom duty and cess, which is 1 crore. Okay, they have given the landed value, which is 1 crore. We need to find out as per our calculation how much it will be. The difference between this is levied as what? Anti-dumping duty. It is levied as anti-dumping duty, guys. Okay, we will see that. Calculate anti-dumping duty. I have first given a note what is anti-dumping duty. This is not mandatory to write, but if possible, write it. So that in short, what is it? Anti-dumping duty is levied to promote the local industry and to curb imports and to ensure that India is not used as dumping ground, which could otherwise have a serious repercussions on the economic growth of the country, guys. Okay. What is it, guys? CIF is already given in the question. We need not calculate, but conversion we need to take care. 2,500 ton is imported at a US dollar of 50 per ton. So we will get the consideration of CIF in US dollar, and exchange rate is given, convert it at 63.84 rupees per dollar. So we got it now in rupees. If you want better, I will also write it here. This is in rupees. Okay. Now, assessable value in rupees is 79 lakh 80,000. Whatever was above, same thing is copy pasted. Basic customs duty is 10% of it, 7 lakh 98. Guys, even if question is silent about social welfare surcharge or social welfare cess, one and the same, okay? Don't get confused. You will use the word either social welfare surcharge or cess. We should always take it at what percentage? 10%. 10% of what? BCD. So how much is BCD? 7,98,000 into 10% comes to 79,800, guys. Okay, now add up all these three. Don't again take this, don't double, like consider it double time. Okay, I have already taken same thing here, so exclude it now. So we need to add up all these three. What do we get it as? Landed value. They clearly told the difference. Anti-dumping duty is the difference between the amounts so calculated, including basic custom duty and cess. Cess here means not the health and education cess. Please be careful. Social welfare cess or social welfare surcharge. So what is that landed value? 88 lakh 57,800 as per our calculation. But they have given as what? 1 crore. Find out the difference between both. Find out the difference between both. That is equal to anti-dumping duty, guys. So what is the amount of anti-dumping duty? 11 lakh 42,200. Sometimes they will give like this to calculate, or else they will give it as anti-dumping duty is 20%. 20% of assessable value. So you will take this into 20%. If they give it in rate, you can apply it on assessable value, guys. Is that clear? Or else if they give any pattern to calculate like this, you can calculate it. Or else sometimes we need to calculate margin of dumping. You know, margin of dumping. What is the actual selling price? Now, at what price it is sold here? Assume in China it is sold at 1 lakh, whereas here it is sold only at 80,000. What is the margin of dumping? 20,000. So what is anti-dumping duty? 20,000. Clear out. Whatever way they give, no, you follow that. There is no fixed way to calculate anti-dumping duty, guys. Government will decide it. But in the question, however they have given, you please follow the same. Yes. You just give an heading, computation of anti-dumping duty, and take down. Computation of anti-dumping duty, and then take down this. Yes. Question number 3. XYZ imports pan masala into India, and CIF value is already given 500 rupees. The rates of tax for pan masala are basic customs duty 37.5%, IGST 28%, and compensation says 60%. Guys, they didn't give anything about social welfare surcharge. Should we take it or not? Take it. Please be careful, guys. 3 things I have already told you in the format. You have to take it, whether it is given in the question or not. What are those? Did you remember? I marked it in the previous class. Hello? Do you remember? What are those? I will mark it again. You can also just make a note of it. Listen here. Assessable value done. Okay, here also, even if question is silent about this, should I still consider, sir? Yes. Freight and insurance. How much is also percentage I have given? See, this 3 should always be there. If question is still silent, Should I take basic customs duty? Yes. At what rate? 10%. And social welfare surcharge will always be 10% of basic customs duty, always, for all the goods. Whereas IGST, if it is given, whatever rate is given, you take. If by chance, if it is not given, then take 18%. Clear? Remaining, whatever anti-dumping duty, safeguard duty, cess and all. Only if it is mentioned in the question, you will take it. If not, ignore it. If not, ignore it, guys. Okay. Let me move again back to questions. Question number 3. Okay. Solution. Compute total import duty. That is what we are calculating. Total import duty, guys, means don't calculate only basic customs duty. You should compute basic customs duty, social welfare surcharge, plus IGST and cess also. All this put together is called total import duty payable. Clear? Because some students, what they do, when they ask total import duty, they will just calculate this and stop it there. Please don't do that. And anyway, they have also given what is IGST rate, compensation cess and all. So you have to move forward for that calculation. Okay. CAF value or assessable value is given in the question, 500 rupees. Okay. Basic customs duty 37.5% on it. I told you if rate is not given, you will take 10%. If it is given, take whatever is given. Okay. 37.5%, which comes to 187.5. Then on this 10%, social welfare cess or social welfare surcharge. Okay. 18.75. Then value to levy IGST and cess is how much? 706.25. On this, we need to calculate IGST. Actually, this will lead to tax on tax. This will lead to tax on tax. What is it, sir? IGST, again, we are calculating on even this. Why? Because this value includes already basic custom duty and social welfare cess. On that, we are applying IGST rate. On that, again, we are applying cess rate. So, is it leading to tax on tax cascading effect? Yes. But still, they are doing it in case of import because they want to inflate the imported materials. Okay, in order to discourage the people to opt for what? Imported goods. They want the people to buy the domestic goods. That is why they are doing all this, guys. Okay, fine. Actually, it will lead to cascading effect, but still they are okay with it. Government is okay with it just to increase the cost of imported goods. Okay. So IGST is on 706.25 at 28%. Then same on 706.25, 60% cess. Okay. So what if I add up all these three? We will get total cost, guys. Total cost of imported goods is 1327.75. See, if they ask this, you will stop it here. But in our question, what was asked is total import duty payable. So what do? You can calculate this in two ways, people. Listen here. You take the final one minus the assessable value. Remaining all is what? Tax. Clear? Or else you can do it in another way. Add up all this. 1, 2, 3, 4. You will get same. You will get the same. What I would suggest is if you have computed this, straight away just deduct assessable value. You will get what is the total import duty payable, guys. Is that clear? But here, actually speaking, IGST and cess is not import duty. But still, when they ask, we are supposed to present like this. Clear? If not, if you just do only this or this, you will lose marks. Please be careful. Should we add even this? Yes, guys. And if by chance, if there is anti-dumping duty or safeguard duty or protective duty and all, it should come before this. Means before this figure, we need to consider that. If at all, if it is there. If at all, if it is there. But for anti-dumping duty, here you took it at the end, no, sir. Guys, because they clearly told, we need to find the difference. What is anti-dumping duty is the difference between this. And this value is including this two. Sir, what about IGST and all? They didn't consider. They didn't consider. And in this question, they didn't ask us to calculate total import duty payable. They asked only anti-dumping duty. So that is why I just computed that and left it there. Clear? If by chance, listen here. If they tell anti-dumping duty is the difference between landed value, including basic custom duty, cess and IGST. Should I take IGST also? Yes. So for example, for this value, we should take IGST also, then compare it with 1 crore and see the difference. Is that clear? Yes. I have told you for anti-dumping duty, safeguard duty and all, whatever they have given the pattern in the question, please follow it. Okay, sometimes they will straight away give the rate. You can apply the rate, guys. Okay, sure. That's all, no? Take down. Just give the heading, computation of total import duty and take it. Computation of total import duty and then take it. Yes. Now, question number 4. calculate the total import duty payable if FOB value, guys, for import duty, should we look into FOB value or CIF? CIF. See, if sometimes if CIF is directly given, we will start with that. If not, first compute CIF and then start calculating import duty, guys. Is it clear? Different kinds of question can be asked. I'm trying to solve totally 5 questions. Like any of this kind of question can come in the exams, guys. Okay, chalo. FOB value in GBP. GBP stands for Great Britain Pounds. Yes, the currency in UK, that is United Kingdom, 18,000. Freight charges incurred actual are GBP 7,500. Okay. Design and development charges incurred at UK, GBP 2,500. Guys, listen here. Now this is the expenses incurred in UK. Should we add it? Hello, should we include it? Yes, any expenses incurred in foreign country, we should add it. But they started by giving FOB value 18,000. Will FOB already include the expenses incurred in foreign country? Yes, it already includes it. Clear, guys? Listen here. Assume like this is like India. The goods are coming from foreign country. What is FOB value? Sir, value of the goods when it is leaving foreign country. Now, if any expenses is incurred in foreign country before it reaches the port, will it already be included in the FOB value? Yes, it is already included in FOB value. Should I add it again? No. Now listen, if they had given ex-factory price and if they give expenses incurred in foreign country, should I add it to get FOB? Yes. But please be careful. In this question, they have already given FOB, which includes expenses incurred in foreign country. Now, if they have given this separately, should I add it? No, this is just to confuse you. This, guys, is already included in FOB. Please be careful. Should I add it again? No, do nothing. Do nothing. Now listen. Darshan, if X factory price is given, assume this is instead of FOB, it is X factory price. In that case, should I add this 2,500? Yes. Because how do we get the FOB value from X factory price? If I add up all the expenses incurred in foreign country to bring the goods from the factory of the exporter to the port, including loading, unloading, everything, freight, all the cost. Clear? Please be careful. This is the value of the goods when it is leaving foreign port. So if I have to add anything, what should I add? The cost which is incurred to bring the goods from foreign port to Indian port, plus if any expenses incurred here. That's all. Hope you guys are getting it. Yes. So because this is very important. If X factory price was given, I would have added this. But here already FOB is given. FOB already includes this. So no need to add it, guys. Next, selling commission. Hello, not buying. What commission? Selling commission at India paid to a local agent at 2% of FOB value. Guys, beautifully framed. Listen here. One extra adjustment. This is nice. Selling commission. First of all, who is seller? Assume I am importing the goods. Am I a seller? No. Seller is in foreign country. But selling commission is paid in India to a local agent. Means it is like this. Supplier's expenses met by recipient. Thing, yes, same way. Exporter, what he was supposed to pay. Who has paid it? Importer. Sir, how did you understand? Simple. It is paid in India to a local agent at 2% of FOB value. Who would have incurred it, guys? Importer. But who was supposed to pay it? Exporter. Selling commission. No, it is not buying commission. Selling commission. So, exporter's liability paid by importer. Should we add it? Yes, we should add it. We should add it. Very similar to what we learned in section 15. Liability of supplier is paid by recipient. Should we add it to the value of supply? Yes, we need to add it. Clear? Sir, what if it was instead of selling commission, buying commission? Who should pay buying commission? Importer. Yes, paid it. But should we add it? No. We learned it in question number 1. Note I had given. Buying commission should not be added. Even though it is paid, still we will not add it, guys. Okay. Chalo. In simple, should we add it here? Yes, selling commission has to be added. Next, E and F is with respect to date, guys. Very important. Date of bill of entry 24th October 2025. Rate of basic customs duty on that day is 20%. Exchange rate as notified by CBIC is 68 rupees per 1 GBP. Rate of entry inward. Okay. Date of bill of entry and date of entry inward. Both are given. Okay. This is 20th October 2025. Okay. Before date of bill of entry. Rate of basic customs duty is 18%. And exchange rate as notified by CBIC is how much? 70 rupees per GBP. Okay, sir. Now listen, guys. Two things are important. This is important for the purpose of exchange rate plus rate of duty. Plus rate of duty. Exchange rate in case of import is the exchange rate as notified by CBIC as on the date of presentation of what people? Bill of entry. So what exchange rate should I consider? 68 rupees. Any doubt? Any doubt? No, sir. Next, sir, what about the rate of duty? Guys, for rate of duty, we have two things. Sir, is it straight away cleared for home consumption or is it going to warehouse and from warehouse it is cleared for home consumption? We need to check. Did they give any information about warehouse? No. So we should assume that from the port straight away it is cleared for home consumption. In that case, what should we do? 1 second, I will show it. Below the format it was there. Yeah, you can see on rate. Please be careful. This, where is it? Yes. Now, this is for rate of exchange, which I already locked, for import. What is it? Now coming to rate of duty. Okay, what is the rate of duty? Goods cleared for home consumption. Am I going with this? Yes, because question didn't mention anything about warehouse, so I'm not taking it. In this case, what rate should we take? The rate of duty on the date of presentation of bill of entry or date of entry inwards, whichever is late. Is both these dates given in the question? Yes, we need to take whichever is later. Whichever is later, guys. Okay, let me go back to the question. Okay, 24th October or 20th October, whichever is later, people. 24th October. On that day, what is the rate? 20%. Is that clear? So should we take 20% or 18%? 20%. And please be careful, this is only for basic customs duty. Sir, should we take this only as social welfare surcharge, IGST and all? No, 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 no. Clear, this is only for basic customs duty. And see, this will come only if there is a change in rate of duty, guys. Sir, no, sir, rate is same, sir. From long back, rate is 20%, sir. So should we bother about what is the date and all? No. Straight away, whatever is the rate, apply it. Clear? Whatever we just now discussed, no, that is relevant only whenever there is a change in the rate of import duty, guys. Clear? Yes. Sure. See, sometimes straight away they will give the rate in the question, or else sometimes they will give the data like this. You need to pick the right one and apply it. Yeah. So that is why one question I have put like that, so that if they give, you should know how to choose right thing. Okay. IGST is 18% reductions. Okay. In sir, cess is not given. What should I do? Exclude. Cess means I'm talking about GST compensation cess. What about social welfare cess or social welfare surcharge? I should always take it. Yes, sir. Chala. Insurance charges could not be ascertained, it seems. What should I do? 1.125. Freight they have given. But the transport is by what, guys? Did they tell how is it coming? Freight incurred, 1 second. Design and development charges, selling commission, bill of entry. Okay, they are not given the mode of import. Huh? Anywhere mentioned? Just a second, I will cross check. Okay, they are not given any mode of transport. Guys, if it is by ship and all, then whatever is the actual freight charges, we will take it. If it is by air, what should I do? Compare this with 20% of what? Customs FOB. Take whichever is lower. Whichever is lower, people. Okay. Sir, what should I do, sir? If question is silent, can I consider it by air? Yes, guys. You can consider it as by air. Anyway, any clue is given, you can nowhere, any ship or vessel, anything is mentioned like that? No. Okay, fine. Chalo, we'll go with the solution. FOB value is already given. Straight away, I will take it. Insurance is not ascertainable. But will we leave it? No. We will take 1.125% of customs. Sorry, FOB value. And FOB value, if they are not given, sir, that 1 second, I will show the format. Okay. Sir, if question is silent about this item, I had already told about this. If question is silent about this, what should I assume? Sir, FOB value and custom FOB value is same. Is that clear? If it is given, then take FOB value, add it. If not, ignore this step, guys. Okay, sir. Freight is given, but assuming it is by air. What should I do? 7,500 or 18,000 into 20%, whichever is lower, which comes to 3,600. I have given a note 2 and 3 for it. Let us see. Okay, first note 1 about the design and development charges. Design and development charges incurred at UK is already a part of what? FOB value. Should we add it again? No, guys. Okay, very important thing. Sometimes like this, they will confuse you because students will think, oh, if they have given something means I should add it. Clear? Need not be always. Insurance is taken at 1.125% of FOB value as charges aren't ascertainable. Freight can be taken at actual but capped at 20% of FOB value, assuming it is by year, guys. Okay, sir. Sir, what if it is by ship? Then we will take actual freight charges, which is 7,500, guys. Oh. Now CIF will come to how much? 21,802.5 GBP. Okay. And exchange rate we know how much is that? 68. Apply that and convert it into Indian rupees. Which comes to how much people now? 14,82,570 rupees. Rupees, not GBP now. Okay. GBP was here. I have now converted into rupees. You can observe in the heading I have mentioned. Now selling commission paid to local agent. Who is paying it? Importer. But whose responsibility it was? Exporter. So should we add this people? Yes, we should add it. And it is paid in rupees. No, that is why we are taking it here. Why it is paid in rupees, sir? It is paid in India. Correct. So after converting, I am taking it. How much it comes to? 18,000. That is FOB value on that 2% into 68 exchange rate. It comes to 24,480. Now what is the CIF value or assessable value? 15 lakh 7,050, guys. Same to same I am taking here. Copy paste. That's all. Okay. So for this kind of question, this will be the first calculation and second calculation would be duty, guys. Okay. Now let us get into duty part. Basic customs duty, I am taking 20%. Sir, why 20%? I already explained. We need to take whichever is later. Okay. Let me read note number 4, 5 and 6. 4 first. Selling commission is paid in Indian rupees to a local agents appointed by exporters to assure their sales in India and hence included in CIF value. This was the responsibility of exporter but paid by importer. We should add it. Okay. Next, fifth one. The exchange rate in force as per CBIC notification on the date when bill of entry is presented is to be considered. And please be careful for exchange rate and all, we don't take whichever is later and all. That is only for rate of duty. Fifth point is with respect to exchange rate, people. Don't get confused. Let me underline. Next, applicable rate of basic custom duty is prevailing on whichever is later. Date of presentation of bill of entry, that is 24th October 2025, 20%, or date of entry inwards of the vessel, aircraft or vehicle on 20th October 2025, 18%, whichever is later. So whichever is later is 24th October. On that day, what is the rate, people? 20%. 20% we will take. Clear? Yes, done. Coming back to the calculation. So basic customs duty is 20% of assessable value, which is 3,01,410. On that social welfare surcharges, 10%, guys. Clear? Please be careful. By mistake, you might take it on this, not on that. Social welfare surcharge is always on basic customs duty, 10%. Sir, question didn't mention about it. Still, you have to take it. Yes. It is levied on all imported goods, guys. Next, value for the levy of IGST is add up all these three. You are getting 18,38,601. On that IGST 18%. On that IGST is 18%. Okay, sir. Fine. They have asked us to calculate total import duty, right? Yes. Let us add it. Let us add it. See, one way is you can add up this two and deduct assessable value. Or else add up only the tax part. 1, 2, 3 you add. These three figures. 1, 2 and 3. You will get total import duty 6,62,499, guys. Is that clear? See, this is little lengthy question where we have to do both. So accordingly, marks weightage will be more. Simple questions also we saw where simple calculations would be there. If such kind of question is asked, maybe 4, 5 marks. Whereas this kind of question is asked means maybe up to 8 marks, 10 marks, they can keep it. Yes. Start. Just give the heading computation of total import duty payable and take down. Computation of total import duty payable and then take it. First, assessable value calculation. Using that, we will compute the duty. This is all the calculations and then notes. Mode of transport is assumed to be air, guys. That is why we have kept a cap, maximum cap for freight. If it is by ship and all, then whatever the actual freight charges, we will straight away take that only. In the question, normally they will give in somewhere what is the mode of transport. But in this question, it was not given, but we have assumed it to be by air, guys. Yes. One last question. Question number 5. Determine the customs duty payable, including the safeguard duty at 20%. Okay, they only given at what rate? For the goods with assessable value 50 lakh. So assessable value is directly given in the question. Considering BCD. BCD means what? Basic customs duty at 10%. And IGST at 18%. They are not given anything about social welfare cess. Should we still take it? Yes. Okay. Fine, guys. So straight away, this kind of question also can be asked, but the marks weightage would be less. Assessable value 50 lakh directly given. Basic customs duty 10% of it, which comes to 5,000. Sorry, 5 lakh. Now, social welfare surcharge or cess, one and the same, okay? Sometimes they use the word cess, sometimes they use the word surcharge. But please be careful. GST compensation cess is different. Okay? Yes. So 10% of 5 lakh comes to 50,000. Then they told safeguard duty is 20%. 20% please apply it on assessable value. So 50 lakh into 20% comes to 10 lakh. Add up everything. You will get 65 lakh 50,000. This is the value to levy IGST. IGST rate is given a yes 18%. Calculate 18% on 65 lakh 50,000, which comes to 11 lakh 79,000. Now the total amount is 77 lakh 29,000. And what they have asked is total customs duty payable or total duty and taxes payable. Okay, you can just mention total duty payable, or if you want, you can also mention like this total duty and taxes payable. So what will you do? Two ways you can calculate. Take this figure minus the assessable value. You will get it. If not, add 1, 2, 3, 4. Four things you have to add. I repeat, 5 lakh plus 50 plus 10 lakh plus 11 lakh 79,000. You will get total duty and taxes payable, guys. Is that clear? Yes. Take down. That's all about the questions on customs calculations, guys. Customs duty calculation or assessable value calculation. Yes, students. So in the previous class, we have learned that, sir, in case of export and import, what is the value on which we need to levy the import duty or export duty? In case of import, what should we take, people? CIF. CIF value, that is what is called as assessable value. And in case of export, what should we take? FOB value, which is called the assessable value. And in case of imports, importer is liable to pay import duty on what value? Assessable value. And we have also understood the format of calculating the import duty, GST or IGST cess and all. Yes. Then coming to export, what is the assessable value on which the exporter has to pay export duty? It is FOB value. But we learned that, sir, we can take these values, that is the value decided by the buyer and seller, we can take it, provided they both are not related, and price should be the sole consideration. But what if they are related? What if price is not the sole consideration? Then we cannot decide FOB value or the CIF value as decided by the buyer and seller. In that case, what should we do? We need to refer to the valuation, guys. Valuation rules. Is that clear? I repeat, yesterday we discussed, sir, here the buyer and seller, in the sense the importer and the actual seller, or if it is export, the exporter and actual buyer should not be related, and price should be the sole consideration. And who is related also, we understood it has similarity with whatever related person we discussed in GST, but not same to same, similarity is there. Okay, sir. Even this percentage is kind of slightly different. Please be careful. Okay, sir. Now we discussed we need to decide the assessable value for both import and export, and all this condition has to be satisfied. Sir, what if anyone is missing? What if anyone is missing? Then we need to follow what, guys? Rules. Valuation rules. I have given it here. You can see I have just given below that FOB value and CIF value. What is it? If the valuation as above cannot be determined, then sequentially the following rules will be applied. Sequentially in the sense, sir, straight away can I go to rule 5, rule 6 and all? No, no, no. You have to follow the sequence. First we need to check rule 4. Sir, rule 4 not possible. Can I go to rule 5? Yes. Rule 5 not possible. Can I go to rule 6? Yes. You have to follow the sequence. You have to follow the sequence. Guys, even for GST, we had a valuation rules, you remember? Rule 27, 28, 29, 30, 31, like that. Same way here. Sir, when we cannot determine the assessable value as above, then we need to follow the valuation rules. So what are those? First, rule 4. Identical goods or comparison method. Guys, simple. Now assume, let me take myself as an importer. I have imported the goods from Australia. Now, I and the seller is actually related. Our price is not the sole consideration. Or else, export case I will take. I am exporting the goods to USA, whereas I and the actual buyer are related. Our price is not the sole consideration. In that case, whatever is the price decided between us, no, we cannot take it. What should we do? We need to look into the identical goods. Identical goods means, guys, assume, let me come from import point of view, because if I explain both at a time, you will get confused. Assume I have imported the goods from Australia. Now we are not taking the value of my goods. We are looking into who has imported the identical goods. Identical goods means same to same. You would have heard the word about identical twins. Sir, two sisters, two brothers are there, same to same, copy paste. Copy paste. In same way, identical goods means, sir, I have imported one goods. Same to same goods is imported by, assume, Yashas. In that case, we will see what is the value for the goods which is imported by Yashas. That will be the what? CIF value for me. That would be the CIF value for me. Hope you guys are understanding. Same way export also. Now, sir, if someone else, assume I have exported the goods to USA. I have exported the goods to USA. We are not taking the value of this goods. We are seeing who else has exported the similar goods. Or sorry, not similar. Similar will come next. Identical. Identical means same to same. Copy paste. Clear. Now assume Savita also has exported the same to same goods to some other country. In that case, at what value she has exported, whatever is her FOB value will be my FOB value. Is that clear? So when I cannot, means we cannot depend on the value declared by us. Why, sir? Because we both are related. I and the buyer or I and the seller are related. So government is not taking that value because our relationship would have affected the value. We would have intentionally kept it lower to avoid tax and all. Clear? So that is why they told we will not take your value, sir. Please look into someone else's value who has imported or exported identical goods. Oh. Transaction value of identical goods will be used in determining the value of imported goods only when such identical goods are sold at the same commercial level and these goods are substantially the same quantity as goods being valued. For example, I was giving an example of Yashas and me. Assume I have imported the goods from Australia. Now similar goods, identical goods is imported even by Yashas at same quantity. I have imported, assume 1000 kg. He has also imported 1000 kg only. Clear? Which is, see, practically not so possible. Sir, how can that person also import same quantity and chances are less. But if it is there, look into it. Sir, what if it is not there? Then they have given next option. Okay, sir, no identical goods. Or Yashas has imported, I have imported 1000 kg, but he has imported only 100 kg. Clear? Can we take his value? No. Why? Because when I have imported 1000 kg, they would have given some discount to me. Whereas he has imported only 100 kg. Can we compare our values? No. For him, the price might be higher, whereas for me, price might be lower. Why, sir? When I purchase large quantity, they will give me some discount. Yes. Okay. So the quantity has to be same and also goods has to be same to same. Okay, sir. Next. In this rule, if more than one transaction value of identical goods is found, the lowest of such value shall be used to determine the value of imported goods. See, first of all, getting one value itself is difficult, but now they are telling, assume all last four bench boys, okay, last bench boys, four people, they have imported same to same goods which I have imported. Now, which value should I take? Whomever I will like, huh? No, no. Take all the values, consider whichever is lower. Consider whichever is lower. Hope you understood. Means if more than identical, if more than one identical goods is there, then we need to consider all the values and take whichever is lower. Okay. Next, this was for import. What about export, sir? Transaction value of goods exported would be based on the transaction value of the goods of like kind and quality, means similar. Okay, same to same. Exported at or about the same time to the same destination country, or in the absence, another destination country. For example, what they are telling is, I have exported the goods to USA. Now I need to see for same country, same goods who has exported. Assume Gayatri also has exported same goods to USA to some other person. Can we take her FOB value as my FOB value? Yes, we can take it. Is that clear? They are telling first preferences. She is also exporting to the same country where I exported. If by chance not available. Assume she exported to UK, but I have exported to US. If US is not available, can we look into next country? Yes, any other country. But she should have also exported at the same time. Sir, I exported this month. She exported last year. Can we take it? No, sir. In that case, what should we do? If things are not matching as given here, we need to look for next rule, guys. Okay, next rule is talking about similar goods. See, actually, similar good, identical goods and all almost same only. But identical means they are trying to tell copy paste, same to same. Whereas similar means maybe few differences can be there. Few differences can be there, guys. Similar goods for imports and computed value method for exports. Rule 5. The transaction value for imported goods would be based on that of similar goods like characteristics and country of production. Okay, means I am importing the goods assume from Australia. Okay. And similar goods is imported assume by Gurumurthy. Okay. Sir, from where? Same country. I have imported from where? Australia. He is also importing from Australia. And goods has the same features or same characteristics. In that case, we have imported. Both of us have imported. Obviously, I have imported for me. He has imported for him. But for CIF value of mine, should I take my good CIF value? No, no, no. I need to take the Gurumurthy CIF value and pay import duty on that. Import duty on that, guys. Next, with respect to exported goods, the transaction value of goods exported would be taken at computed value, that is cost of production plus charges for design, brand and reasonable profit. Now, if whatever FOB value I have exported for, that is not dependent. They're telling leave it. Find out the calculated value or computed value. How do we calculate it, sir? Take my assume I have exported laptop to a foreign country, USA. Now they are not taking the value of that. They are telling calculate the cost. Cost of production of laptop I will should take. Then I need to add charges for design and branding, if at all, if it is anything. Plus, what is the profit I want to make? I want to make means whatever selling price I am charging for the importer in USA, they are not taking that. They are asking me to rework my computed value. How is it? Simple. My cost plus any reasonable profit which I want to make. That is normally what selling price. They are considering that itself as FOB value. They are considering that itself as a FOB value, guys. Next, residual method. Rule 6. For exports, the transaction value would then be arrived at by reasonable and consistent means by the custom officer. Means, as per this rule, custom officer will decide. Clear? Assume, guys, I have imported or exported, especially exported. What is covered here is in the first line, export. I have exported the goods for which there is no identical goods, there is no similar goods. Then I should tell proper officer, you help me in that. He will decide. He will fix the FOB value, guys. Okay. Obviously, when he is fixing it, he will not fix it blindly. He will fix it based on reasonable and consistent means. Okay, sir. Then coming to imports. For imports, rule 6 is not applicable. Straight away, we need to go to rule 7 and 8. Rule 7 and 8. So, rule 6 is only for what people? Export. Okay. For import, we have two more rules. What is it? Deductive value. Deductive value means we need to do reverse working, guys. What is it? Unit price at which the imported goods or identical or similar goods are sold in the greatest aggregate quantity. Means, guys, after the goods are imported into India, at what price they are sold in India, we need to check. At what price they are sold in India. Listen, I repeat, I have imported the goods or identical goods is there or similar goods is there, which we have imported into India. And after importing it, assume we are selling it for 1500 in India. Now what should I do? Is I need to do reverse working and find out at this point what was the cost. At this point, what was the cost, guys? So what are we doing? selling price at the highest quantity, highest greatest quantity, okay, minus commission, selling expenses and profit made, transport and insurance taxes within India. Simple guys. Year to year, what all expenses we have incurred, we need to deduct it, including selling expenses in India and profit also. For example, assume I want to make profit. Okay, the expenses incurred in India is 200. So how much should I deduct now? 700. So if I deduct 700 from 1500, how much we will get? 800. It is nothing but the value of the goods when it was imported into India. Value of the goods when it is imported into India. Understood? Now we are just doing reverse calculation. Sir, I found out what is the selling price in India. Deducted all the expenses incurred in India, including the profit which is to be made by me. What will I get now? What was the value of the goods at this point? At this point, guys. Okay, sir. The goods at or about the same time can be considered, if not at the earliest time of importation, but before the expiry of 90 days after such importation. Guys, see, if all these values are available for my goods only, I need to take it. If not, identical goods. If not, similar goods. Clear? Especially if I am taking identical goods or similar goods, I need to take it within 90 days. Okay, sir, someone imported the similar goods 1 year back. Should I take those values? No, no, no. Obviously, over a period of time, values will change. Clear? So in last 90 days, whoever has imported the similar or identical goods, take the figures from that. Take the figures from that. Okay, and try to take recent time. Sir, I have two values, sir. One was imported 1 month back, another was imported 2.5 months back. What should I take? 1 month back. Recent. Recent take. All right, sir. Yesterday it was imported one product, sir. Similar product, sir. Can I take it? Yes. Okay. Nearest time we need to take it, guys. Okay, this is all about the values. Please be careful. One more rule is there. 7 and 8 is only for imported goods, not for exported. For export, last rule is residual rule. Okay, for export, only 3 rules. 4 or 5 if possible. If not, straight away you will go to 6. Whereas for imported goods, rule 4 or 5, then 7, 8. Okay, and obviously 7 and 8 and all we will come, only 4 and 5 is not available or not possible. Okay. Computed value, rule 8. This would be the cost of material used in producing the imported goods, including fabrication cost and usual profits commensurate with sale of goods of same class in India, including specific additions as per rule 10. Insurance, freight and landing charges. Means we need to compute this value, guys. There itself they're telling computed value. Sir, how to compute this value? This would be the cost of material used in producing. Assume, guys, I have imported the, just a minute, I will clear this. I have imported one goods. They are telling, don't take that goods. Don't take that goods. If similar goods is manufactured in India, what is the cost of manufacturing? If similar goods, not same goods, if similar goods is manufactured in India, same goods in the sense, see, I have imported the goods. Obviously, is it manufactured in India? No. So we need to look into some other goods which is similar to it or which is identical to it, which is manufactured in India. What is the cost of manufacturing of it? We need to take. Okay. Plus, including fabrication cost. Fabrication cost is nothing but the cost of converting input into output. Input into output, guys. Okay. Means simple. It is like this. I can take like this. Okay. Now I have imported one goods. No. For manufacturing that goods, what is the raw material cost? Okay. I need to purchase the raw material. Yes. Now I need to convert raw material into output. For that, what is the conversion cost? Conversion cost is nothing but manufacturing cost. Okay, sir. Plus, what is the profit? Obviously, when I manufacture and sell, will I sell it at my cost? No, at some profit. What is the expected profit? Whatever value we get, no, that is called CIF value. CIF value to pay what? Import duty, guys. To pay import duty. Okay, chalo. And also rules 10 is there, no? That is inclusion of insurance charges. That also we can add because listen, that is important. Now this is the cost which we calculate, especially this part cost. If the goods is manufactured in India, but whatever goods I am importing, no, is it manufactured in India? No, it is manufactured in foreign country, so it has to come to India now. So for bringing that into India, we have to incur some freight cost, insurance cost, and all. Yes. So for this product, even though we are not incurring it, if it was imported, what is the freight cost? What is the insurance cost? We need to add that also. Freight plus insurance as per rule 10. Hope you're understanding. I repeat, guys, I have imported one goods. Now we are not looking into that value. Sir, if similar goods is manufactured in India, what is the raw material cost? What is the conversion cost? Conversion cost, fabrication cost is one and the same. That is the cost incurred to convert raw material into output. Okay, sir. Plus, what is the profit we want to make? And this will be the value if the goods are sold in India. But I am bringing my imported goods from where? Outside India. So if these goods are produced outside India and if it is brought into India, we will also incur freight and insurance. No, add that also. Add that also. So whatever we get will be the CIF value to pay what, guys? Import duty. Okay, sir. Okay, done. This is done, done, done. From here we'll continue. Rest all valuation part we have already taken care. Next, we have some more concept, guys. We'll finish it off. Small topics only. Exemptions under Customs Act. Actually, we spoke about exemption already. Who has the power to give exemption for imported or exported goods, guys? Central government. They can give the exemption. Now, any exemption is there. Can they withdraw it? Can they remove the exemption? Yes, but prospective date. Not from the retrospective date. They cannot tell we are removing the exemption 1 year back, 2 year back. They cannot tell it. Can they remove it from today? Yes. If the central government is satisfied that it is necessary in the public interest to do so, it may, by notification in the official gazette, exempt generally or subject to such conditions as may be specified in the notification, which would need to be fulfilled before or after clearance. Goods of specified description from the whole or any part of duty of customs. Sir, can they put conditional exemption? Guys, in section 11 of CGST Act, we discussed, no, same to same. Similar thing is there. Here, when central government is giving exemption, can they put any conditions telling only if you satisfy this condition, you can claim this exemption? Yes, that is called what? As what? Conditional exemption. Now, sir, while giving exemption, can they give whole exemption or part exemption? Anything, whatever central government will decide. For example, assume when I import a goods, the import duty applicable is 10%. They can completely exempt 10% fully, or else they can tell because 70% it is exempt. Remaining you pay. Remaining you pay. That is called as what? Partial exemption. Partial exemption, guys. It may be by special order exempt from duty any goods on which duty is leviable only under exceptional circumstances. Means they can also tell, see, if you import this duty, normally we don't charge import duty, but only in certain exceptional cases we may charge it. Okay, which is the exceptional cases also they will name it. Oh. Further, no duty is to be collected if the amount of duty leviable is less than or equal to 100. If the amount of duty is less than or equal to 100, they told no duty. No duty, guys. Okay. Next, both the general and specific exemption may be granted by providing for the levy of duty at the rate expressed in the form, which is different from the statutory rate. Okay. Both here also, same like GST, we have general exemption, special exemption. Okay. May be granted by providing for levy of duty at a rate expressed differently. For example, sir, actual rate is 10%. Now they told they want to give exemption, but not fully. Can they tell, okay, now you pay import duty only at 3%, 5%? Yes, that is like a partial exemption. Okay, sir. An exemption notification cannot be withdrawn and duty cannot be demanded with retrospective effect, which I already explained. Now, what are the powers of customs officers? Customs officers means like how we had proper officer for GST, same way for customs purpose, we have customs officers, okay, who belongs to custom department, guys. The custom officers are authorized to declare warehousing stations. Okay, declare warehousing stations means, sir, once I have imported the goods or I am exporting the goods, before it is exported or once it is imported, I can store a goods, my goods, where? In the warehouse. Where can I store? Okay, all this regulations can be found by whom? The customs authorities or custom officer. Okay, means they can declare, okay, this place is for warehousing purpose, because any person cannot go and set up a warehouse there near the port. They have to first obtain the license, only then they will be allowed to set up a warehouse. So the license to set up a warehouse will be given by whom? Customs department or customs officers. Next, allowing setting up of warehouses, that is either public or private. What are the difference between public and private warehouse and all? We will see later. It is covered. Public in simple government warehouses. Private means anything owned by other than government. Okay. Power to search any vessel, conveyance, and person. Now, will custom officer has any right to stop any vessel in between? Only. Can he check it? Yes. Vessel in the sense ship or aircraft. See, aircraft he cannot stop on the air. Okay, he can ask them to land, and once it is landed, can he check it? Yes. Including passengers, can he check? Yes. I gave an example of gold smuggling and all. No, people will keep gold in different places and come. Okay, inside their body only, or maybe in their luggage bag and all. In that case, will proper officer has a right to check everything? Yes. Now can passenger take a protection telling no, how can you check? Oh, this is against human rights, other this and all. No, they have all the power to check it, guys. They have, see, literally checking means how will they check and all? They have a system. Okay, now anything anywhere you have hidden means they will be able to scan. If you guys have traveled through flight and all, you will know. Okay, baggage check-in will be there. If you just put the bag, they can sit and see there what and all is there inside the bag. Okay, and if anything found which is not safe, they will tell, sir, this is there, please you have to remove it. Okay, for example, if it is a scissor or any blade or anything like that, okay, knife and all, they will not allow you to carry. So they will tell, sir, this is not allowed, this is not safe for travel, please remove it. If not, we will not allow. We will not allow the baggage for check-in. Okay. Next, power of seizure of goods. Now, if they find it illegal, can they seize the goods? Yes. If they find any passenger that they're illegally bringing the goods or illegally taking the goods outside India, they can seize that goods. Then power to arrest. So if it is serious, then they will also have a power to arrest a person. Especially whenever they are coming into India, they are bringing some illegal goods and all. Especially assume, sir, they are bringing some arms and ammunitions. Okay, will the proper officer or customs officer have a right to arrest them? Yes. But only if the case is serious. If not, they will seize the goods and send you. Yeah. Administration of customs law. Person in charge. Okay, guys, who is person in charge means the person whoever is in charge of conveyance. When we were learning about e-way bill also, we spoke about this. Okay, person in charge of the conveyance has to carry a valid document along with the conveyance. Yes, that is what we are learning now. Master in case of vessel. Okay, master means in case of ship we call them as master, whoever is in charge of it. Or in case of aircraft, commander or pilot, conductor or guard or any other person having a chief direction of a train in case of train, driver of or other person in charge of conveyance, any other like truck, lorry and all. Yes, but when it is import, export and all, chances of road transport is very less until and unless it is a landlocked countries. You know who are landlocked countries? Nepal, Bhutan and all. Clear? Only from there goods can come or go in road. Whereas in all other mode, it will be by either air or water. Guys. Oh. Responsibilities of a person in charge, PIC. We saw who is the person in charge. No, what is his responsibilities? Submit the import or export manifest. Guys, import or export manifest means assume a ship is coming into India. Where is my map? Now, a ship is coming into India carrying the goods and passengers. Okay. A ship is coming into India, guys. Now, before ship reaches India, or even if it is a flight, same story. I am taking one example, ship. Okay. Now, before it reaches India, they have to file import manifest. Import manifest means what, sir? They have to tell to the customs authorities of India that, sir, we are coming in ship carrying all these goods and services which belongs to so and so person, especially goods. Especially goods. Okay, obviously, guys, please be careful. Import duty will not be levied on persons. Correct, sir. Persons are coming from outside India to India. Import import duty. No. Okay, but obviously ship might be carrying goods along with passenger, but I will focus only on goods because we will levy import duty on goods. Okay. Now the ship is entering India carrying goods. Now before they enter India, they have to file a import manifest telling, sir, we are bringing all these goods, quantity, everything. They have to give the details to whom? Customs authorities of India. And this belongs to whom? They will be importers in India, no? Which goods belongs to whom? All these details they will already have. Who? Person in charge. How will they know, sir? Guys, these goods are sent by someone here, no? Correct. Oh? The exporter is somewhere outside India. You would have given the details. This goods belongs to whom? All those details they would have given, no? Yes. Based on the information given by the exporter, the shipping company or the person in charge has to file import manifest with whom? Customs authorities. customs authorities. Okay, sir. In that case, the Indian government or customs authority will tell, okay, ship can enter India. Ship can enter India and you can be landed here, you can unload the goods. Sir, what if import manifest is not filed? Then we will not allow the ship to enter India. And also we will not allow, if by chance if they enter also, now we will not allow them to unload the goods into Indian port. Clear? Filing import manifest is mandatory, guys. Is that clear? Who has to file this to? With whom? Who has to file this? Person in charge. With whom? With the customs authority. Okay. Now, how will this person in charge know about all this information, sir? Guys, exporter who is exporting the goods would have told what is the quantity of the goods. Clear? And this goods has to be delivered in which country? To whom? Yeah, all these details would be given. Okay. This importer is also called as consignee, who is receiving the goods. Correct? All these details has to be mentioned in import manifest, guys. Same way, if it is export, assume goods is going, I'm just giving an example here. Goods is going outside India. Clear up? Yes. Now, before it is leaving Indian port, the shipping, assume it is going by ship only. The shipping company person in charge has to file what? Export manifest. He has to file export manifest telling, sir, we are carrying all these goods from India to so and so foreign country. To so and so foreign country. And this goods belongs to whom? The exporter details. And for which country it is going, the consignee details, all has to be given. Clear? And once the proper officer or the custom officer cross check this, only then they will allow the goods to be loaded into the ship. Only after the customs officer gives the approval, the goods will be loaded into the ship and then ship will leave Indian port. Is that clear? Means it is like if you want to export, first take permission from the custom officer. Let him approve. Only once it is approved, goods will go to the port and it will be loaded into the ship. After that, ship will leave Indian port. Is that clear? So in simple, if I have to tell, without the custom officer approval, can we load the goods into the ship and can ship leave Indian port? No, no, sorry, they cannot. Clear? First, approval has to be given. Only then the goods will be loaded into the ship. Only then the ship will leave the Indian port. Is that clear? Yes, sir. Chalo. Okay. What should person in charge do? First, submit import manifest in case of import of goods. Whereas, if it is in case of export, file export manifest. Ensuring that the conveyance comes through the proper route. Guys, there will be a designated route, whether it is coming by air or through water. You have to come through that way only. Sir, no, sir, I will go in a different way. Kalla Marga. Can I do it, sir? No, no. Okay, they will be guided. So those people will be knowing exact route, how it has to be gone. They have to go and land it in a proper place, which is authorized. Ensuring that the conveyance land at an appropriate place. Sir, now assume the flight is coming into India. The landing was approved in Mumbai airport. But can they come and land in Bangalore airport? No, no. Wherever approval is given for you, go and land there, not wherever you want. Okay. Next, ensure that the goods are loaded or unloaded only after the proper permissions or orders. Guys, when goods are coming into India, only when proper officer has given a permission, it can be unloaded. It can be unloaded into Indian port. Then it will move to warehouse. From warehouse, the importer can go and collect it. Or else directly, importer can collect the goods from port also, sir. Yes. If he is ready, he can pay the import duty and collect directly goods from the port. Or else from the port it will go to warehouse. From warehouse he can pay import duty and collect it. Okay, sir. What about export? Guys, when export is happening, the exporter will bring first the goods to the port and the custom officer has to approve it. Only then it will be loaded into the ship. Then ship will leave Indian port. Ah. The import manifest means the report which is required to be delivered under section 30, which states that person in charge in case of vessel or aircraft shall deliver to the proper officer an import manifest prior to the arrival of vessel or aircraft. Okay, means if the goods is coming by ship or aircraft, when import manifest has to be filed? After reaching India or before coming to India? Before coming to India. If not, they will not allow you to land. They will not allow you to enter India. Clear? Permission has to be taken before you come to India. Okay, before arrival, in simple. Whereas if you are coming by land, then in case of vehicle, within 12 hours post the arrival at the custom station in the prescribed format, means If goods is coming by road on a truck, sir, even after reaching India within 12 hours, can they file the import manifest? Yes, they can also file it before coming only, but they have been given the option. Even after entering India within 12 hours, you can file import manifest. Clear? Yes. Actually, they will be stopped at the border itself. So in the border itself, they have to give full details. Only then they will be allowed to enter India, guys. Also, it is imperative to note that the import is completed only when the goods so imported are cleared for home consumption. Guys, when the import procedure is completed is when it is cleared for home consumption. Who will pass this order? The customs authorities. Simple. Listen, yeah. When importer is importing the goods, he has to file one document, which is that and all we will see later. Okay. Now he has to file one document with the customs authorities telling, sir, my goods is coming from so and so country, sir. Based on that, they will fix what is the customs duty you have to pay or import duty you have to pay. So importer has to pay import duty. Only then the proper officer will tell, okay, you can take the goods. That is called goods cleared for home consumption. Goods cleared for home consumption means, sir, the importer has paid import duty, whatever is liable to pay. Now he can take the goods. And for home consumption means, guys, will he go and use it in his literally home? No. Here home means India. Sir, now importer has a right to use these goods in India? Yes, but only after paying the import duty, guys. Okay. Import and export procedures under customs law, both procedure is there, but not so much in detail for you guys. But whatever is there, we will see. Procedure for import through sea route, that is, when the goods is coming by the ship, guys, or vessel. Cargo clearance, even if it is coming by air and all, procedure is almost same, but the mode of transport will be different. Instead of ship, it will be aircraft. Clear? Yes. For the carrier, okay, means who is bringing the goods? No, what is the responsibility, guys? For each of them, responsibility is there. You can see for carrier means the person in charge. I can tell. Okay, for the carrier is nothing but person in charge. Later, you can see custodian. Custodian is nothing but the customs officer. Then for the importer, what is the responsibilities? Clear? And for customs authority, what are the things we need to see? Okay, first we are seeing import, later we will see export, guys. Oh. For the carrier or the person in charge, means through which the goods are entering India. That is either through vessel or the flight. But here they are talking about sea route, so we will focus on vessel. Section 30, filing the import general manifest prior to the arrival of vessel. Guys, who has to file this with whom? The person in charge with customs authority. Customs authority. Got it? No? What details they have to give in that? Import general manifest is generally filed on the basis of bill of lading or airway bill and is issued by the carrier. It contains details about the shipper, consignee. Consignee means the person who is importing the goods. No number of packages, description of goods, date, vessel, details, etc. Guys, now see. Now, goods is coming to India through a ship. Now there is one person who is sending the goods. Now obviously ship is not bringing that goods by themselves. There is one person who is actually a seller, or we can call it as exporter, who is sending the goods to whom? Importer, through this ship. Okay. Now this person would have given the details of the goods. Yes. When he handed over the goods to the shipping company will give bill of lading to this guy, telling, yes, we have received your goods. Or airway bill. If it is a flight, instead of ship, if it is a flight, then they will give airway bill. Clear? What is it, guys? It is just a receipt telling, yes, we have received your goods. Yes, we have received your goods. How much quantity, everything. Because that is like a proof, no? Acknowledgement. Telling, yes, we have received your goods. We will deliver it to a person, whomever you are told, in India. Is that clear? Or else, their responsibility is just to deliver where? In Indian port. So, shipping company is agreeing with it. Now, using the details, what is it? Bill of lading or airway bill. Guys, who will issue this document to whom? The shipping company to the exporter in foreign country. Okay, sir. Now in this already information will be there, no? Clear. Using that, the shipping company will file what? Import manifest with whom? Customs authorities. Giving full details, including the expected date of arrival to the Indian port. They have to tell, sir, when the ship is expected to arrive to Indian port. Especially if it is a ship and all, it will take months together or days together, guys. Clear? So they should tell also the expected date of arrival and they're coming from which country, goods belongs to who is the importer, what is his name, is from which state, all the details will be given. Okay. And how will this company know all that? I have told you, exporter would have given the details. Obviously, exporter know the details about buyer, right? Yes. So he will give the details to shipping company has to give it to customs authorities. Okay, sir. Because guys, now Indian government or customs authorities have control over the seller or shipping company now. Whom do they have the control over? Shipping company, because now the seller is not coming to India and selling the goods. He is sending the goods through whom? Ship. Now, if customs authority has to question anyone, whom will they question? The ship or the person in charge. Okay, obviously, for ship literally means not ship, the person who is in charge of the ship. Clear up? Yes. Next, section 31, entry inward granted by the customs. It acts as a permission for unloading the goods. The date herein would be considered as what? Relevant date for arrival of goods into India. Guys, once import manifest has been filed by the shipping company or person in charge with the customs authorities will cross check that. They will also cross verify it with the document which would have been filed by the importer. Guys, importer also will file one document called bill of entry with whom? Customs authorities. So importer will file with customs authorities bill of entry. Whereas person in charge who is bringing the goods into India will file import manifest with whom? Customs authorities. They will cross check both. Is quantity, everything matching? Okay, goods is coming from which country? All they will cross verify, and customs authorities will tell, okay, shipping company, you are allowed to come to India and unload goods. Okay, so they will pass the order. And that day, the day they pass the order, no, that day is considered to be the date of arrival of goods into Indian territory. For the custodian is nothing but the customs authorities, guys. Customs authorities. Custodian is appointed by the customs. The custodian would be responsible for keeping proper record of unloaded goods. The custodian is also responsible to ensure that the goods don't leave the customs area, that is clearance, without proper authorization from the customs officer. Means when goods are coming to India, when it is getting unloaded from the ship to the port, there will be a person who will be to supervise that procedure, because you need to cross check whether whatever quantity has been mentioned is that unloaded and that, because in the document 100 kg might be mentioned, but when they're unloading, what if they unload 110 kg? Clear, at 10 kg might miss out the import duty, correct na? So they will cross check the quantity, everything whatever is mentioned in the document, is it the same, and they will allow the goods to go to the warehouse, or if importer is ready to pay import duty immediately, it will be cleared for own consumption. Clear up? But there are chances that importer will go to the port and straight away collect the goods even without paying the import duty. For that, who should be the responsible person? Custodian. He should make sure that goods are not taken away by the importer without paying import duty. Without paying import duty, guys. Next, what is the responsibility of the importer? Section 46. The importer needs to submit the bill of entry. Okay, he has to submit one document. Guys, person in charge will file what? Import manifest. With whom? Customs authorities. Whereas importer is filing what? Bill of entry, telling, sir, my goods from so and so country is coming in so and so ship, and it will be landing to India on so and so day. Okay, and the value of that goods is so much. All these details has to be given by the importer. This bill of entry needs to be signed by the importer. The bill of entry contains the details of goods along with bill of lading, invoice, packing list, product literature, that is all the details about the goods, license, import permit, and GATT declaration, that is general agreement for tariff and trade. Declaration form duly signed by the importer. Guys, one more important thing is, whenever a person is getting engaged in import or export, he should obtain a license, import license, export license. A copy of that also has to be filed along with bill of entry, or that license number has to be mentioned. Clear? And product details all, and the seller would have sent a copy of invoice to the importer, no? That also has to be filed. Why, sir? For value purpose. Okay. For customs, okay, for authorities, we already saw what is the responsibility of custodian. Custodian is like a person who belongs to customs authorities only, but he will be there in the port to supervise whenever the goods is coming into India, how many quantities unloaded, and it will not leave Indian port without payment of import duty. He will ensure all that. Okay. Now the customs authorities normally who are on the top. The customs authorities note the bill of entry by assigning a number and date stamp. This date is then constituted as what? Date of presentation of bill of entry. Now, once the importer has filed the bill of entry with the customs authorities, they will cross verify everything. If everything is okay, they will date and stamp it. Once they date and stamp it, that day will be locked, guys. That day will be what? The date of presentation of bill of entry. Do you remember, for rate of exchange and rate of duty, this date is important. Rate of exchange, that is exchange rate to convert the foreign currency into Indian rupees. We need to consider the exchange rate as notified by CBIC as on what day. For the date of import, it is the date of presentation of bill of entry in case of import. Clear? Even to decide the rate of duty also, this date is important, people. Next, post the above procedure, the assessment as described above is undertaken, and once the assessed duty is paid, wide TR6 challan. So the assessed duty is nothing but import duty. Who has to pay it? Importer. Through what? TR6 challan. This challan is submitted as an evidence of payment to the customs authority, and out of charge order is issued. And on the basis of this order, the custodian allows the clearance of goods from customs area. Now, once, guys, goods reaching India, the importer has paid the import duty. Now the customs authorities will pass an order called the out of charge order. Out of charge order means, guys, now goods can be taken out of the customs authorities or customs power. Can the goods leave now the customs authorities power? Yes, or customs area we call it as, because importer has paid import duty. That means, is the goods cleared for home consumption? Yes, goods are cleared for home consumption. Importer can bring that goods and use it within India. Demurrage is the charges levied by port authorities if not cleared within 3 days of unloading. Guys, we learned that, sir, goods cannot leave customs area without payment of import duty. Now, what if the importer, goods is already unloaded, it has come to the customs area. Still, importer is not bothered about paying import duty. Till importer pay the import duty, they will not clear the goods for home consumption. Now, months together, goods is lying in customs area. It is wastage of space for customs area, because there will be number of goods coming into India again and again. No, if importer is negligent and if he is not taking the delivery of goods on time, if he doesn't take the delivery of goods within 3 days, then from the 4th day, demurrage will start. Demurrage is nothing like a penalty charged by customs authority on whom? Importer, for delay in taking the delivery of the goods imported. Clear? Obviously, because this is a wastage of space for whom? Customs authorities. And they have to look after that. That is their responsibility. Because, guys, if goods has been lost or damaged when it is under the control of customs authorities, can importer put a case against customs authorities? Yes. It is extra burden for customs authorities. No. So that is why they will encourage, please come and take as early as possible. If not, if you don't take it within 3 days, from 4th day, we will charge you penalty, because our space is getting wasted and extra responsibilities for us. Okay, import part done, guys. Next, export part. Now, I am exporting the goods from India to outside India, any foreign country. Now, as an exporter, guys, I should file one document with the customs authorities. And the shipping company or the flight or in simple person in charge who is taking my goods from Indian port to foreign port, they should also file export manifest with whom? Customs authorities. I will file one document telling, sir, my goods is going outside India, assume to Sri Lanka or Singapore. I will file a what? A document. What is the name of that document? We will see. Then even the person in charge will file export manifest telling, sir, as per Vikas instruction, we are taking these goods from the Indian port to foreign port. Now the customs authorities will cross check both the figures or both the documents. Is everything matching? If yes, if export duty is liable to be paid, I have to pay it. Then they will allow the goods to be loaded into the ship or loaded into the flight. Then the ship or flight can leave India port or Indian airport. For vessel or ship, we call it as Indian port, whereas for air flight, we call it as airport. Airport. Okay, sir. Now for the carrier, what is the responsibility? But guys, carrier means nothing but what? We already discussed, no? Person in charge. PIC. Filing the export general manifest prior to the departure of vessel. Okay, they have to file export general manifest with whom people? Customs authorities. What does it include? Export general manifest is generally filed on the basis of bill of lading or airway bill and is issued by the carrier. It contains the details around the shippo, consignee, number of packages, description of goods, date, vessel details, etc. Guys, in this, they will fill the details using what? Bill of lading or airway bill. Sir, what is bill of lading or airway bill? We discussed for import, no? Similar. Now, I am exporting the goods from India to foreign country. I would have given the details of the goods to the person in charge, right? Now, when I have given the goods to him, he will give a receipt to me, acknowledgement to me, telling, yes, because we have received your goods. So much quantity, we will deliver it to so and so country, what you have told. Clear? They will give a receipt. That receipt is called bill of lading or airway bill. Based on that, guys, please be careful. Bill of lading or airway bill will be issued by whom to whom? By person in charge to the exporter. Clear? Using this information, the person in charge will file export general manifest with whom? With the customs authorities. Okay, sir. If you understand one procedure, the reverse of that is another procedure. Clear? I explained the import part, Import part I explained here, right? Okay. In case of import, the destination is in India, whereas the origination is outside India. Same if I reverse, it is export. It is export, guys. Next, section 39. Entry outward granted by the customs. It acts as a permission for loading the goods. The date herein would be construed as the relevant date for exportation of goods out of India. Okay. Entry outward granted by the customs means they will tell, okay, goods can be loaded into the vessel and vessel can leave the Indian port. That is the date of permission. Clear? So it is like a grant of permission for export of goods. Exporter. Section 50. The exporter needs to submit the shipping bill. This shipping bill needs to be signed by the exporter. The shipping bill contains the details of goods along with invoice, packing list, product literature, license, and export permit. So the exporter has to file one document with the customs authority. What is it, guys? Shipping bill. Shipping bill giving the details of goods exported, along with his license and all. Because when he is engaged in export of goods, you will be first having a license, export license. The details also has to be given. Okay, done with the procedure part, guys. Next, transportation and warehousing. Guys, there is two important words to understand: transit and transshipment. Transit and transshipment both are not same. Both are not same. What is it exactly? We will understand. See, here I am displaying a picture where a ship is carrying the goods and coming to India, and India is not a destination port. It is just halting in India and continuing their journey. Continuing their journey. You can see, can you see their destination is Hamburg via India. Via India means India is not a destination port. We call it as halting port. Why are they stopping in India, sir? In Mumbai port, you can see there Mumbai. Hello. Yes. Ah. Now, listen here. Assume ship is carrying goods and coming to Indian port, but are not unloading the goods into India. They will continue their journey to what? Hamburg, a foreign country. Okay, sir. In that case, will we levy any import duty on these goods? No, no, no. They are not unloaded into Indian port. Okay, ship is just halting in India or Indian port for some time, maybe for service, refueling, or anything, but they are not unloading the goods. So in that case, sir, whichever goods entered India and leaving India, will we consider it as import and later export? No, no, no. No import, no export. It is just crossing Indian sea line. That's all. Hope you understood. This is called as transit. What do we call it as, people? Transit. How many ships is there in this case? Only one ship. One ship is coming from outside India, halting in India for some time, for any purpose, maybe for service, repairing, refueling, anything. And they're continuing their journey. Continuing their journey. In that case, we call India as what? Halting port. Whereas the destination is one some foreign port. Starting point is foreign port, destination is foreign port. Our India was just used as halting port, no import duty. No import duty. Only one ship is involved here. Okay. One more case. We have something called as transshipment. We discussed even in e-way bill about this, when goods are unloaded from one vehicle to another vehicle. What do we call it as? Transshipment. Immediately details has to be updated in part B. Correct? Yes. Now, not e-way bill. Please be careful. Goods are not going within India. It is going outside India. Now, listen, people. Listen. Sir, assume goods, ship is coming carrying the goods from Sri Lanka to India. And the goods will not be unloaded into Indian port. It will be unloaded from one ship and loaded to another ship. So that means, listen here. Goods came to India from ship number 1. From where? Sri Lanka. In India, these goods will be unloaded from ship 1 and will be loaded to ship 2. Now, ship 2 will not unload everything in India. It will continue the journey. Where it will go, sir? Assume China. Assume China. So, in India, what happened was, it was just a transshipment. What happened? Only transshipment. Means movement of goods from one vessel to another vessel. And sir, for this, will we levy import duty, sir? No, no. It is not considered as import. Is that clear? But obviously, customs authority has more work here. They have to ensure that whatever is unloaded from ship 1 completely is loaded into ship 2, because there might be high chances of manipulation. Close it. There can be high chances of manipulation. For example, assume from this ship totally 100 tons were unloaded, whereas but what is loaded here is only 90 tons. In that case, what should we consider? 10 ton as what? Import. Correct. So in this case, the proper officer has to supervise properly that whatever has been unloaded here, is it loaded here? And he has to cross check. Clear? In simple, nothing is loaded to Indian port. Goods are unloaded from one vessel to loaded to another vessel. That's all. What do we call this procedure as, guys? Transshipment. Transshipment. Is that clear? I repeat, goods is coming in one vessel from Sri Lanka to India, and in Indian port, goods are getting exchanged from one vessel to another vessel. And second vessel will continue their journey from India to China or Afghanistan, any foreign country. In that case, is there any import into India? No. But obviously, they have to file some documents and all with customs authorities telling, sir, we will come to India, enter India, but not unload anything into India and all. They have to give the details. They have to give the details, guys. This is called transit and transshipment, guys. Yes, let me go and read what is given. Let us see. Transit and transshipment. A conveyance or vessel may reach a port but may not unload the goods at that port. It may halt means rest, okay, or stop for some time. Halt at a port for any other purpose such as repairs, replenishment of supplies, refueling, etc. Once the purpose is over, it may start sailing to the destination port. In this case, two ports are involved. Port means where the ship will be landed. Okay. Yes. The halting port known as transit port, and the destination port which is called as what? Port of clearance. Guys, see, listen here. If this is in India, obviously we will charge import duty. But if this is in India, but this is outside India, then no import duty. No import duty. Is that clear? I repeat. Please be careful. If destination port is in India, obviously it is import people. We need to levy import duty. No, sir, destination port is not in India. Only halting port is in India, whereas destination is outside India. Will we levy import duty? No. Such a phenomenon of temporary stay at a port other than the destination port is called transit. In transit, the goods remain in the same vessel. Hello, same vessel. Is there any change of vessels? No. And consequently reach the port of clearance, which is nothing but destination port. In transshipment, that is next one. However, the vessel after reaching the intermediate port, India is an intermediate port, transfer the goods to another vessel, and second vessel into which the goods transferred, loaded from first vessel carries the goods to the destination port. So here Indian port will be called as what, people? Intermediate port. Goods came in vessel number 1 from Sri Lanka to India. In India, goods were unloaded from vessel 1 and loaded to vessel 2. Now vessel 2 will go to China. In that case, sir, what is India? Intermediate port. Intermediate port, guys. So it is an import for China and not for India. Export for whom? Sri Lanka. Transit of goods without payment of duty. Section 53. Accordingly, any goods imported in a conveyance and mentioned in the import manifest or the import report, as the case may be, for transit in the conveyance to any place outside India or any custom station may be allowed to be so transited without payment of duty, subject to such conditions as may be prescribed. Clear? Means, can I bring the goods into India and take it outside India without unloading the goods into India without paying import duty? Yes. But there are few procedures to be followed. We need to ensure that we are following it. Transshipment of goods again without payment of duty. In case any goods are imported into custom station or intended for transshipment, a bill of transshipment shall be presented to the proper officer in the prescribed form, telling, sir, my goods will come in vessel number 1 and it will be unloaded and loaded to another vessel and vessel will leave. So the bill of transshipment has to be filed, guys. However, where the goods are being transshipped under an international treaty or bilateral agreement between the government of India and government of foreign country, a declaration for transshipment instead of bill of transshipment shall be presented to the proper officer in prescribed form. Now assume India has an international treaty with Sri Lanka and China, telling goods will go from Sri Lanka to China through India. We have an adjustments. We have an agreement. In that case, sir, is bill of shipment required? No, they told bill of shipment is not required. In that case, what should be filed, guys? Declaration is enough. Declaration is enough. Sir, what if there is no agreement, no treaty? In that case, bill of transshipment is required. Okay. Next, where any goods imported into a custom stations are mentioned in the import manifest or import report, as the case may be, as for the transshipment to any place outside India, such goods may be allowed to be so transshipped without payment of duty. Sir, should the person in charge file import manifest with the customs authorities? Yes, yes, because they're bringing the goods through a ship to India and then taking away. No, at least they have to inform that. They have to inform that. Now, what exactly is the difference between transit and transshipment? Guys, theory questions can be asked. Please be careful. This is one of the important thing. Yeah. In case of transit, goods remain in the same vessel at the intermediate port, which we also call it as halting port. Whereas in case of transshipment, goods are transferred to a different vessel at a intermediate port. Okay. Transit. Only import manifest is to be submitted for entry. No other document is required. Whereas for transshipment, as goods are changing from one vessel to another vessel, we need some extra information. That is, import manifest has to be there. Along with that, bill of transshipment, or if there is an international treaty or agreement between the countries, declaration is also required to be submitted. Along with import manifest, even this has to be submitted. Okay. For transit, no supervision is required at the intermediate port. Now, should the custom officer or supervisor go and check whether the goods are loaded, unloaded, and all? No, because transit goods will just come in one vessel and it will move. That's all. No unloading will happen. Whereas in case of transshipment, should they supervise? Yes. What they should they supervise, sir? The custom authorities or officer has to cross confirm that whatever is unloaded from vessel 1 is loaded into vessel 2. Same quantity. Transshipment process is conducted under the supervision of customs officer. Transit. The same vessel reaches the destination port, whereas transshipment, a different vessel reaches the destination port, guys. That's all. Next, warehousing. Guys, warehousing is, just a minute, when goods are imported or to be exported. No, sir, now assume the goods are imported into India. They are imported into India. The importer is not immediately able to take the delivery. In that case, sir, will the proper officer throw the goods? No, no. Obviously, in that case, the goods will be sent from custom area to where? The warehouse. And this warehouse can be owned by government or by private people. But obviously, for this, rent will be charged. Who should pay that rent? Importer. Clear. Now, importer has two choices, guys. As soon as the goods come to the Indian port and it is unloaded here, he can go and collect the goods from here itself by paying import duty. Or else, if he is not able to take the delivery immediately, then goods will move to where? The warehouse. The goods will move to the warehouse. From warehouse, after paying the import duty, goods will be cleared for home consumption. Is that clear? So there are two types of warehouse: public warehouse, private warehouse. What is it? We will understand. And even in case of export also. Assume I want to export goods outside India. Sir, now I took the goods to the port on 10th December only. But the ship will leave Indian port on 15th December, sir. Till then, where will I keep the goods? Goods is also cleared. Now the custom officer has told it can be loaded into ship. But ship will leave Indian port only on 15th. We have around 4-5 days gap. What do? You can store it in the warehouse. You can store it in the warehouse. And obviously, even in that case, the exporter will be liable to pay the warehouse charges or rent charges, guys, for the space. So what is it warehousing? We will see. Warehouses allow goods to be stored and thus deferment of duty. The goods are to be released from the warehouse subject to clearance, that is post assessment and payment of duty. Now, guys, before the goods are released from warehouse, the importer is supposed to pay import duty. Now, can goods go from port to warehouse without even paying import duty? Yeah, it can go. But before it leaves the warehouse, no, importer has to pay import duty. Now, this can also happen. Importer is not able to pay immediately import duty. Can he ask the goods to move to the warehouse, store there, arrange the money, pay the import duty, and then take the delivery? Yes, he can do that also. He can do that also. Public bonded warehouse. These are owned and managed by the government or government bodies or agencies. Only dutiable goods can be warehoused here. Only dutiable means, guys, on which the goods on which the duty is applicable. Sir, if the goods on which the duty is exempt, can we store it in the warehouse? They're telling me. If the duty, that is customs duty or import duty or export duty, is exempt on the goods, that goods cannot be stored in the warehouse. They're telling exporter, importer, bring the goods, straight away send the goods for the exporter. If it is importer, then as soon as it is unloaded in the Indian port, you have to take it. Why? Because government is not getting anything on this. They're telling, don't store in the warehouse and all. Immediately take it. Immediately take it. Availability of space certificate from the warehouse keeper would be required. Okay, means before you take the goods to the warehouse, first check whether space is there. Take a confirmation from the warehouse keeper. Who is warehouse keeper? The person who is in charge of the warehouse. Now, if you tell, oh yes, because you can bring your goods, space is there for you. Okay, once they give that permission only, I can take the goods to the warehouse and store there. Because what happens now? Normally, when we have imported the goods, it will be huge quantity. I should not go take it to the warehouse and tell, sir, ಸ್ವಲ್ಪ ಜಾಗ ಕೊಡಿ. They will tell no jaga. No jaga. Then can I keep on roaming around from one warehouse to another warehouse? No, no. First take a permission from them telling space is there, then take the goods and keep it there. A double duty bond would also be required to be furnished for deposit of goods. Guys, double duty bond means, see, assume I have imported the goods, I am supposed to pay 1 lakh as import duty. Now I am not paying it immediately. Goods is going from port to where? Warehouse. I need to give a double duty bond telling, before the goods are cleared from the warehouse, I will pay the import duty. For how much? 2 lakh. Double duty. How much I am paying, supposed to pay import duty? 1 lakh. But they are asking the bond for how much? 2 lakh. Double. Okay. This just as a guarantee, guys. Also, the person seeking warehousing would need to pay rental or warehousing charges to the warehouse keeper. Obviously, they are giving the space for me to store the goods. No, for that, will they charge rent? Definitely, I need to pay it. Whose responsibility is to pay warehouse charges? Importer. And in case of export, exporter. Okay, private, same to same, guys. This was owned by whom? Government. This is owned by whom? Private. Adani. Ah, this are owned and managed by private entities like Adani. You know Adani, no? Yes, he is mainly into shipping business and all. Yeah, yes. And he has actually his own railway line also. Okay, normally Indian railways and all is managed by whom? Indian government, central government, correct? But Adani has his own railway line for movement of goods. For movement of goods, guys. Okay. Ah, this aren't generally allowed where public bonded warehouses are available. Means, sir, assume there is a public warehouse available here. Will they allow to set up private warehouse there only next to it? No, no. Because not because of competition, they will tell, no, no. You can set up somewhere far, somewhere little far. Yes. Only dutiable goods can be warehoused herein. Same story like above. Availability of space certificate from the warehouse keeper would not be required in this case. Okay, here it is not required. It seems. Here it is not required. Whereas here it is required. Huh? Yes. Okay, because government and all charges will be less. So space will be less there also. Clear? Why many of the people will be willing to store there. So in that case, first check whether space is there and get a availability certificate, then take the goods. Whereas in case of private, that is not mandatory. Double duty bond would still be required, but customs officer would need to be posted at the expense of warehouse keeper. Okay. Now, there will be one custom officer posted where? Near the warehouse. Why? Custom officer has to confirm that goods are not leaving the warehouse without paying what? Import duty. Now, one custom officer will be appointed near the warehouse. But who should pay them? Warehouse keeper. Means, in simple, the person who owns the warehouse. Clear? Yes. This just to cross confirm or cross check or to ensure that the goods will not leave the warehouse without paying import duty. Okay. The goods so warehoused can vary depending on whether these are for 100% export oriented units or otherwise, as shown below. Period of warehousing. Guys, what is export oriented units means? Assume I am importing the goods not to use in India, again to export. Again to export. I do only export. Whatever goods I import, I am just exporting it to other countries. In that case, I am called as what? Export oriented units. I import only for the purpose of export, guys. In that case, I am called as what? Export oriented units. In that case, how long can I store my goods in the warehouse? Maximum. If it is capital goods, 5 years. If it is other goods, 3 years. Okay, now. And why, sir? Guys, simple. What happens? No, if I am an importer and later exporting it, I will not bring the goods to my place and later export it. What I will do is I will try to keep it in the warehouse. Within few days, I will export it. Because assume I import the goods, bring it to my place. Later, I want to export. Again, take it to the warehouse. Again, take it to the port and export it. Lot of procedure, no? Unnecessary freight cost or transportation cost. So some people, what they will plan is, if they are exporting the goods as it is, they will bring the goods. It will be in the warehouse. Within next few days, they will export. They will export it. But maximum period for which the goods can be stored in warehouses for export oriented units. If it is a capital goods, maximum 5 years. If it is other goods, 3 years. Sir, what if I am not export oriented units? I am importing the goods to use it in India, sir. Or else I am importing the raw material to use it in my manufacturing process, sir. In that case, maximum any goods I can store in the warehouse for how many days or how many years? 1 year. Maximum 1 year. Any goods, whether it is capital or other goods, doesn't matter. Any goods, maximum it can be stored in the warehouse 1 year. And obviously, longer I store the goods in the warehouse, the amount of rental charges will be more clearer. But even the customs authority is telling you cannot keep the goods there for so long. Why? Because they will also get the revenue later. Correct? Because if the goods are stored in the warehouse, it will be allowed to leave warehouse only if I pay import duty. Now assume I am ignorant. I am not paying import duty also. I am not taking the delivery of the goods also. It is a loss for me, no doubt. But even the revenue for the government is getting deferred. It is getting postponed. Yes, that is why they are trying to push you. You cannot keep however you want, however long you want. Maximum is this period. Within that, you have to take the delivery of the goods, guys. Okay. Next, baggage rules. You know baggage? What we carry with us? What we carry with us when we are going outside India or coming to India. Guys, there is something called as accompanied baggage and unaccompanied baggage. Accompanied baggage means, cabin. Okay, in the cabin up to few kgs you can keep. Okay, they call it as cabin baggage. Okay, means in simple, I can carry with me one small bag. Clear, up to 7 kg, up to 10 kg. They have some limits. Okay, with up to that limit, I can carry with me. Okay, which I can place in the flight at the respective place. Okay, whereas if it is a big luggage, up to certain kg, they are also telling it is free. If it is above that, they will charge you money. Okay, now like 15 kg, 30 kg, 20 kg, depending upon which country you are going and which flight you are offering or which airlines, guys. Okay, they will have different terms. Now, that baggage is called what? Check-in baggage. Okay, now what happens when we have to check in ourselves first? We need to check in the baggage first. It will be sent separately. Okay, obviously that will also come with the same flight only. When I reach the destination airport, they will give it to us. We can go and collect. Correct? Yes. So here for baggage, how much can we bring with us without paying any duty? They are telling. Okay, we can bring our personal things without paying import duty. Yes, obviously. Sir, I had taken clothes and other things to outside India. Now I am coming back to India. Can I bring my clothes? Will you charge import duty on it? If it is a personal items and all, they don't charge import duty. But if it is like other things like liquor, gold, silver, and all, for that they will charge import duty. Up to a certain extent, no import duty. But if it is beyond that, they're telling we will charge import duty. What is it? We will see. Goods imported by a passenger or a member of crew. Member of crew means who is working in the airlines. Okay. Yes. That is, it might be pilot or anyone. Are classified under one tariff 18 and levied to a single rate of duty. Section 77 provides that the owner of any baggage shall, for the purpose of clearing it, makes a declaration of its content to the proper officer. Okay, I need to declare the details of what my baggage to the proper officer. Telling, sir, what and all is there in that. Baggage includes unaccompanied baggage, but excludes motor car, alcoholic drink beyond certain limit, and goods imported through courier. So baggage will not include motor car, alcohol and all. Up to certain extent, alcohol they are allowing few liters, few bottles and all, but beyond that, it is not a part of baggage. Okay. Even goods imported through courier also is not a part of baggage, guys. Baggage rules 2016 provide for duty-free clearance up to a certain limit of articles such as used personal effects. That is our own things. What is personal effect also I have given you. You can just see here. Personal effect means things required for satisfying daily necessities but does not include jewelry. Sir, jewelry also mine only, sir, but personal effect will not include jewelry. For jewelry, there is some limit. Okay. Yes. Generally, duty-free allowance is allowed to the Indian resident or foreign residing in India. Duty-free allowance means what, people? Without paying import duty. Can I bring this baggage with me? Yes. Okay, let me continue. Travel souvenirs. Okay, personal effect, travel souvenirs. Sir, what is travel souvenirs? Guys, I would have brought some magnet or any keychain and all for the memory of the country which I visited. No, those things are allowed without even paying import duty. Yeah? Yes, they are allowed. And other articles when carried on the person or in the accompanying baggage of a passenger arriving in India. Accompanying or unaccompanied baggage means you understood, na? Accompanying means which we will carry with us also. Clear? Which we also call as cabin baggage. Whereas unaccompanying means which we will check in. Which we will check in separately. We will go and collect it in the destination airport. Okay, sir. What are the rules telling? Duty free baggage allowance of dutiable and non prohibited articles means duty free baggage means, sir, I can bring the baggage up to this much value without paying any import duty. Sir, what if the value is more than this? Then whatever is the excess part, no, on that we need to pay import duty. What is it? Rule 3. Who is coming into India? An Indian resident or a foreign residing in India or tourist of Indian origin. Okay, they are coming into India. From where? Other than Nepal, Bhutan, and Myanmar. Any country. They are coming from any country other than landlocked country. Other than what? Nepal, Bhutan, and Myanmar. What is the duty free baggage, guys? 50,000. Up to 50,000, no import duty. Next, proviso to rule 3. Sir, what if it is tourist of foreign origin? Here it was only tourist of Indian origin is covered. What if there is any tourist of foreign origin? For them, the value is only 15,000. Here it was 50, no? For them, it is only 15,000. Okay. Here, in both the cases, we saw a person is coming from a country other than Nepal, Bhutan, and Myanmar. Sir, what if they are coming from those three countries? Then the value is only 15,000. Let it be anyone. Let it be anyone who is coming from there. The value maximum on which import duty will not be levied is 15,000. An Indian resident or a foreigner residing in India or any tourist. Okay, sir. Last one. Rule 5. Any passenger residing abroad for more than 1 year. Okay. Anyone who was outside India for more than 1 year, now coming to India. Okay. From any country. How much gold they can carry without paying import duty? If it is a gentleman, hello gentleman, how much you can carry? 20 grams with a value cap of 50,000. 20 grams with a value cap of 50,000. Obviously, you will be wondering, sir, now how much is the value per gram, sir? They are telling 20 grams, but maximum 50,000 in there. Clear. This was put years together back. Still, they have not changed. Okay. Now you know the gold price is more than 10,000 per gram only. That means you cannot carry more than 5 grams. Clear. 4 or 5 maximum, that many grams. Now I guess it is around 13,000 gold per price per gram. Okay, it keeps varying. Don't question me now, sir. No, sir. Today it is this much, anta. I told around 13,000. So you just do into number of grams. If it cross 50,000, obviously you have to pay import duty and bring it. Clear? I mean 20 grams they told, but maximum value cap is how much? 50,000. So obviously 20 gram is only for namesake. Maximum you can carry is 4 to 5 grams is what I feel. Correct? Yes. Next, lady ಗೆ ಜಾಸ್ತಿ ಇಷ್ಟ ಇದು ಅದಕ್ಕೆ they like this. So for them double. Gentlemen get 20, ladies get 40. 40 grams with a value cap of 1 lakh. Clear? And 40 gram also is name for namesake. You know, within 1 lakh, how many grams will be there as on today? Clear? You can bring only that much duty free. If you want to bring more than that, pay import duty and bring it. Because many people do this, especially when they go to Dubai, UAE, and other countries and all, their gold is cheaper. They will try to bring it. Okay, up to certain level you can bring, but if it is above that, you have to pay import duty. Clear? And see, they will allow you to bring, pay import duty and bring it. Okay, not free. Guys, we spoke about the refund. Refund where in GST. Similar to that, there is something called as duty drawback. Duty drawback where in the customs. See, there are two ways they will give duty drawback. Listen carefully. Ullas, duty drawback means it is nothing but whatever import duty I have paid, they will give it back. They will give it back. Nothing but refund. But they are using the fancy name called duty drawback here. Refund also is there later, but here they are using the word duty drawback. It is covered in section 74 and 75, guys, but simple. Sir, what is covered in section 74 is, listen, important because you should know the difference between both. What is covered in section 74 is, sir, I have imported the goods. As it is, I am exporting, sir. As it is, I am exporting. So when I import, I paid import duty, no, sir. Will you give it back? Yes, they will give it back. 75. What is covered in 75 is, I have imported the raw material. I have imported the raw material on which I have paid import duty. Now I am using that raw material in my manufacturing. I will produce the output and I am exporting what? Output. I am exporting output. I will repeat. Listen here. First, 74. What is covered in section 74? Sir, I am importing the goods on which I have paid import duty. And as it is, I am exporting it. Now, when I export, will you give back my import duty? Yes. They're supporting export by doing it. Second case is, I will import raw material. I have paid import duty on it. I will use this raw material in the manufacturing of my output. And I will export my output. When I export my output, will they give the duty drawback of the import duty which I paid on import of my raw material? Yes, they are giving it. Okay, let us see. Duty drawback provisions enables the exporter to obtain a refund of the import duties, that is customs duty paid on. First one, imported goods which are meant for re-exportation. Okay, means whatever goods I am importing as it is, I am re-exporting it. So where is it covered? Section 73, people. Next, inputs means raw material which are processed for or used in the manufacture of final product are to be exported. Means I will import input, I will produce output out of it, and I will export what? Not input, I will export output. Okay, where is it covered, people? Sorry, this is not 73, 74. This is covered in 74. This is covered in 75. Okay. Central government is empowered to grant duty drawback as per section 74 and 75. This benefit is available not only for the re-export of the duty paid goods, but also on the imported materials used in the manufacture of goods which are exported. Okay, question can be asked on this. Please be careful the difference between 74 and 75. Don't get confused. We discussed in GST section 73, 74 and 74A. That was recovery, demand and recovery. That is different. Sir, section number I already covered. No, sir. This is of Customs Act, not of GST Act. Whatever we covered under demand and recovery in GST, section 73, 74, 74A, that is of CGST Act. What we are covering now is of Customs Act. Okay. Section 74, first point. Refund of import duties paid on import of goods when the same goods are re-exported. Sir, I imported, Same goods I am re-exporting it. Will I get a duty drawback? Yes. Other side, 75. Refund of import duty paid on import of raw materials or inputs, which is used in the manufacture of exported goods. Guys, what are we exporting? Raw material or output? Output. But that output is manufactured from what? Raw material, which is imported. Which is imported. Next, coming back to 74 again. All goods are eligible for duty drawback subject to their identification. Means I should prove, assume I am the importer. I should prove that, sir, whatever I imported, same to same goods I am exporting. Same to same goods I am exporting. It is my responsibility to prove it. 75. Drawback is available only in respect of notified goods. Sir, here are they giving the duty drawback for all the raw materials? No, only for some notified raw materials. Only for some notified goods, guys. Okay. What are those notified goods? You need not worry about it. It is not a part of your syllabus. Okay. Again, coming back to 74. Duty drawback shall be allowed even if imported goods are used in India and then exported. Means, sir, goods are imported into India, used for few months in India, then it is exported. Will I still get a duty drawback? Yes, but at a sliding scale. Sliding scale means, in simple, the more I use in India, the less will be the duty drawback. The less will be the duty drawback. Okay. Whereas this one, if the goods manufactured from imported materials are used in India and subsequently exported, then no duty drawback shall be allowed. Means simple. Sir, I imported the raw material. I produced output out of it. And output I am using it in India for few months or few days. Later I will export. Will I get a duty drawback? No. If the output or manufactured product is used in India, later if it is exported, no duty drawback. No duty drawback. Whereas on the opposite side, 74, is it giving? Yes. Sir, I imported the goods used in India for few months. Later I am exporting. Will they give a duty drawback? Yes. But less amount. Next one. Last one. Where the goods are not put into use after import, 98% of the duty drawback is admissible. For example, sir, I imported the goods. I paid 1 lakh as import duty. Without even using it, I am exporting it. Without even using it, I am exporting. How much duty drawback I will get? 98,000. 98,000. Sir, what if I use and then give it, sir? Then give it. Then what, so? Then I have given here. In cases where the goods have been put into use after import, duty drawback is granted on a sliding scale basis, depending upon the extent of use of the goods. Sir, what is that sliding scale? I have given it here. I have given it here. What is it? Okay, sliding scale, guys, simple. I imported the goods. I have paid import duty, assume 1 lakh. For easy sake, I will take 1 lakh. Will I get full 1 lakh duty drawback? No. If I have not at all used and I exported 98%, which is 98,000. Sir, no, sir. I imported the goods, used it in India for few months, and then I am exporting. How much duty drawback I will get is given here. You can see here. If the goods were in possession of the importer, they might be treated as used by the importer. As per the rules framed by the central government, percentage of duty drawback is enumerated in the given table as follows. What is it? If it is used to up to 3 months, how much will be the duty drawback as? 95%. For example, assume importer imported the goods and used in India for 1 month, 2 months, 3 months. How much duty drawback you will get? 95%. For example, assume I have paid import duty 1 lakh. How much duty drawback I will get? 95,000. Next, sir, I have used for more than 3 months, up to 6 months, sir. Assume I have used for 5 months. After importing, I have used the goods in India for 5 months. How much duty drawback I will get? 85%. Assume I have paid import duty 1 lakh. How much duty drawback I will get? 85,000. 85,000. Likewise, as I use more and more period, the duty drawback amount will come down, guys. The more the usage in India, the duty drawback will keep on dropping. Is that clear? And if it is used for more than 18 months, they're telling no duty drawback at all. No duty drawback. Means once I have imported, I need to export that goods maximum within 18 months. Clear? If I export it after 18 months, no duty drawback. No duty drawback, guys. Is that clear? Yes, sir. Then coming to you. Duty drawback under section 75 is allowed as per all industry rate, which is standard, notified by the drawback directorate. Okay. In case if no rate is notified, means if there is no air, that is all India, all industry rate is not there, then the exporter can apply for what? Brand rate, depending upon the brand of the goods which I am exporting, guys. Is that clear? First priority is always all industry rate. If that is not available for my output which I am exporting, then I can apply for what? Brand rate. Okay, sir. Then, guys, see, sliding scale for normal goods is this one. Whereas if it is for motor vehicle, they have given different sliding scale. If you have used for 1 year, up to 1 year will have how many quarters? 4 quarters. For each quarter, we need to reduce how much? 4%. We need to reduce 4%. For example, assume I have imported a motor vehicle, later I am exporting it, whether car or two-wheeler or anything. I have used it for, assume, 3 quarters. How much should we reduce? 4% into 3. That is coming to how much? 12%. Is that clear? Means for each quarter, we need to reduce 4%. I have used for 4 quarters and I am exporting. In that case, 4% into 4, 16% we need to reduce. Is that clear? Sir, what about in the second year? It will be 3% per quarter. 3% per quarter. In simple, guys, assume I have imported the motor vehicle, used totally for 2 years, and then I am exporting. How much should I reduce? For first year, 4% for each quarter, 16%. For second year, 3% for each quarter, it will be 12%. So totally how much should we reduce? 28%. How much should we reduce? 28%. Or else if I tell it in another way, how much duty drawback I will get? 72%. How much duty drawback I will get? 72%. And please be careful. This is for which one? Motor vehicle. Okay. So for first year, for each quarter, we need to reduce 4%. Second year, for each quarter, 3%. For third year, for each quarter, 2.5%. Last year, for each quarter, 2%. Done? Yes. Drawback is allowed if the use is over 24 months only with the permission of Commissioner of Customs if sufficient cause is shown. See here actually to fourth year it is allowed, but when it comes to any other goods other than motor vehicle, maximum you have to export within 18 months. If by chance for any genuine reason if there is any extension, even if it is over 24 months with the permission of Commissioner of Customs, I can claim a duty drawback only if they approve it. Only if they approve. Normal time is 18 months. But even if it is beyond 24 months, duty drawback can be allowed with the approval of the Commissioner if they approve it. Oh, next. No duty drawback shall be admissible where? Important, guys. It will be little confusing, but please be attentive. I will try to explain with the numbers. No duty drawback in the following case. Means either of the ABCD. Either of the ABCD, no duty drawback. Okay, when is it? For both the sections. For both the sections, 74 as well as 75 common points. The duty drawback amount is less than 50 rupees. 50 rupees. Even obviously the importer or exporter will tell, sir, let go. So they're telling if the duty drawback amount is less than 50, don't claim for it. The duty drawback amount exceeds 1/3 of the market price of export product. For example, let us take the market price of the exported product, guys, is 10 lakh. Is 10 lakh. Whichever product I'm exporting, they're not talking about my selling price. What is the actual market price? If it is sold, what is the amount we will get? Okay, 10 lakh. Now 1/3 of that will come to how much people? 3 lakh. Correct? 3.33 lakh. 3.33 lakh. Okay, 3,33,333 like that. Okay, sir. Now they're telling duty drawback should be within 3,33,000. 3,33,000. Assume duty drawback I'm claiming 4 lakh. Will they process? They told no. Means in simple, whatever is the market price of the exported product, your duty drawback should not be more than 1/3 of it. Clear? So 1/3 of the market price is coming to how much people? 3,33,333. The duty drawback should be within that. If it is above that, like 3,50,000 or 4 lakh, no duty drawback. Clear? Because obviously market price is that much, whereas you are claiming duty drawback at that much. Something fishy here. Something nonsense is there here. So that is why they will not process the duty drawback. Next one. The duty drawback amount is less than, okay, now less than 1% of FOB value. of export, except where the amount of duty drawback per shipment exceeds 500. For example, they're telling, assume FOB value. FOB value means what is the export value? Now I am exporting my goods, right? What is the FOB value at? Guys, what is the assessable value for the purpose of export? FOB value. What is the FOB value? Assume it is 1 lakh. I am just taking 1 lakh. Into 1% comes to how much, people? 1000. Now, if the duty drawback is less than 1000, they're telling, don't claim it. Don't claim it. Sir, what if it is 2000, 5000, 10,000, 20,000, 12,000 and all? You can claim it. But obviously, you need to check B also in that case. Okay, B also should not be attracted. C also should not be attracted. Clear? My duty drawback should be in between that. D, where the value of the export goods is less than the value of imported material used in the manufacture, if necessary. Okay, guys, what they are telling is, I imported the raw material, assume for 20 lakh, whereas I am exporting my output at only 15 lakh. How is it possible? Again, something nonsense, right? I repeat, I imported the raw material for 20 lakh. I am producing output out of it, and I am exporting output for how much? Only 15 lakh. No loose will do this. Clear? No person will do this. No fool will do it. Why, sir? Because I have imported the raw material. I have manufactured output out of it, for which I would have incurred manufacturing cost. So now I will consider my import cost plus manufacturing cost plus I want to make some profit, and then I will export. But here, this is less than 20 lakh. How is it possible? No. In this case also, they are trying to do some manipulation. So that the customs authority is telling no duty drawback. No duty drawback, guys. Okay. And if necessary, certain minimum value addition over the value of imported materials can also be prescribed by the government. Means government can put minimum value addition. For example, I imported the materials for 20 lakh. No, they have to tell the value of my export product should be minimum plus 50%. Means it should be minimum 30 lakh. My export has to be minimum for 30 lakh or more than that. Is that clear? Yes, sir. Application for duty drawback is required to be made within 3 months from the date of export of goods. Okay. Which can be extended up to 12 months subject to the conditions and payment of requisite fee as provided in the drawback rules. So guys, once the goods is imported and later we are exporting, no, within 3 months from the date of export, we need to make an application for what? Duty drawback of import duty, which I had paid when I imported. Okay, which can be extended for up to 12 months. Next, the duty drawback needs to be paid within 1 month, and if not paid, interest is payable to the claimant. Means, sir, if I am eligible for a duty drawback, they have to process it within 1 month. If not, if it is delayed, after 1 month, interest will start. Interest will start, guys. Also, where drawback has been paid to the claimant in excess of what is eligible to, the claimant has a time period of 2 months to repay the excess. Else, interest would be charged on the exporter from the date of payment of drawback until the date of recovery. Means, I was eligible to claim 2 lakh duty drawback, but I have claimed 3 lakh. They have also processed it. So I got to know later at least, oh, I have claimed excess 1 lakh. Should I give it back? Yes. I have to give it back within 2 months. If not, they will recover it from me along with interest. Along with interest, guys. Duty drawback is a scheme that encourages exports and thereby accelerates aggregate demand. It is intended to propel the economic growth of the nation and thereby accelerates the GDP. Sir, why are they supporting this, sir? Why are they supporting by giving duty drawback? Guys, any country will support the export. So now if you are importing on which you have paid import duty, later if you are exporting out of it, we are giving a duty drawback of what? Import duty you have paid in order to support what? Export. Okay, sir. Next one, demand of duty. Guys, from here and all, whatever we will be learning, it is very similar to what we covered in GST. But in GST, it was more detailed, whereas here it is in simple. Demand and of duty means what? Guys, we discussed about demand and recovery. If a person who is supposed to pay self-assessment tax, if he has not paid, then they will start the assessment. Who? The proper officers. They have different types of assessment. Yes, or else let me discuss like this one by one. Guys, I was supposed to do a self-assessment. I'm talking about GST, okay? I was supposed to do a self-assessment of my GST liability. If I do and pay it, no problem. If not, if I am not able to do, I can request the proper officer for what? Provisional assessment. Telling, sir, whatever you tell, I will pay it, sir. In that case, first they will ask me to pay based on estimation. Later, when final judgment is done, they will ask me to settle the amount if there is any difference. Okay, sir. If not, I have done something, but I have not disclosed that tax fully or sales fully. Clear? Or else I was supposed to pay tax, I have not at all filed. I have not at all filed the returns, I have not at all paid the tax. And proper officer has identified it. Can he scrutinize? Can he ask me to pay tax? Yes. Okay, there are different types of assessment, scrutiny assessment, best judgment assessment and all. They will do it. And they will start demanding the money from me. By issuing what? Notice. First they will issue notice, they will wait for my response, and after that they will pass a final order. Even after the final order, if I am not paid, can they start the recovery proceedings? Yes, they can start the recovery proceedings. Clear? Correct, people? First, it is self-assessment. If I fail to do, I can request for provisional. If I don't do both, then they will start the assessment, like scrutiny assessment, best judgment assessment and all. Even after that, if I am not paid, then they will start demanding the money. Along, that is tax, interest along with penalty, if applicable. Even after that, if I don't pay, they will start what? Recovery proceedings. Clear? Yes. Similar like that is there here. Demand of duty. The notice of demand must be served in writing, clearly mentioning the reasons and providing the party an opportunity of being heard. Generally, the show cause notice should be served within 1 year from the relevant date. That is, 1 year from the date of assessment or payment of duty. See, from the 1 year of assessment means they have calculated now what I am supposed to pay. Within 1 year, they will send a notice to me. Clear? Or else I have paid duty, but I have short paid. I was supposed to pay totally 10 lakh, but I have only paid 6 lakh. For remaining 4 lakh short paid, can they send a notice to me? Yes. Within 1 year from where I paid 6 lakh. Okay, telling you are short paid, remaining 4 lakh, you have to pay along with interest. They will send a notice. However, in specific cases where the duty or interest is not paid or short paid by reason of collusion, willful suppression of facts or misstatement, then the notice could be served within a period of 5 years. Means in simple, due to fraud or willful misstatement or wrong collusion, means intentionally I am not paid or I have short paid. In that case, they will have how much time to send a notice? 5 years. Guys, you remember 73, 74 of GST? Yes. Sir, for under 73, less time is there. Whereas under 74, more time because fraud. Clear? Yes. Because sometimes even for the department, it will become difficult to identify the fraud. Clear? They may get to know very late. Still, will they have a chance to send a notice? Yes. The demand of duty provisions also calls for attachment of property for up to 6 months for protection of interest of revenue, and that could be extended for another period of 6 months. But the attachment period cannot maximum exceed 2 years, after which the duty must be collected in the name of customs duty and paid to the credit of government. So in simple, they are telling even after the notice, still the person has not paid the amount which is supposed to pay. Can they attach their properties? Yes. Similar thing we had even under GST, no? So for recovery proceedings, once it is started, will the proper officer have a right over my property and all? Yes, same way here. If I'm not paid what I'm supposed to pay, then they can attach my property for maximum 6 months, which can be extended for another 6 months. But they're telling maximum it can be. See, actually, if you include, add both 6 plus 6, 1 year. But later they told maximum it can be attached for 2 years. Because later, assume if court gave some judgment or stay order and all, including that maximum it can be for how much? 2 years. Okay, sir. Next, refund. Now, duty drawback was different, refund is different. But obviously, both is same only. What I have paid, they are giving it back. But refund is in different scenarios. Duty drawback was when, guys? Two scenarios were there. Please be careful. Sir, I have imported the goods as it is, I am exporting 74. Sir, I am importing raw material, paid import duty, converting that into output. I am exporting what? Output. In that case, will I get a duty drawback? Yes, section 75. But now it is about refund. What is it? Refund of export duty. Where on the export of goods, any duty has been paid, such duty shall be refunded to the person by whom or on whose behalf it was paid. If, for example, guys, assume I had exported the goods and I have paid export duty of 2 lakh. Now that goods is returned back to me. That goods is returned back to me. Why, sir? Maybe the buyer was not happy. Buyer was not happy, or else I had just sent the goods for service purpose. It is coming back to me. In that case, will they give back my export duty? Yes. The goods are returned to such person. Otherwise, then by way of resale. In simple, sales returns. It is not resale. It is sales returns. Clear? If it is a resale, will export duty be refunded? No, no, no. For example, I sold to her. She again resold it to me. Can I claim a refund? No, no. Now, I sold the goods to Shakti. She sent the back goods to me. She returned it back. Why, sir? She was not happy with it. She told, Vikas, sir, what is this? You have sent cheap quality product. Take it, Anta. She sent it back to me. Is it considered again as an import? No, sales returns. It is considered as sales returns. So when I exported, if I already paid export duty, will they give it back to me? Yes, sir, because goods also came back to me. Next, the goods are re-imported within 1 year from the date of exportation. Means I exported the goods, assume for Darshan, and re-imported it within 1 year. Whatever export duty I paid, will they give it back? Yes, they will give it back. An application for refund of such duty is made within 6 months from the date on which the proper officer makes an order for clearance of goods when they are imported back. Means the application for refund has to be made when the goods come back to me, within 6 months from there. In simple, goods was exported. I have paid export duty. Now again it is imported back. When it is imported back within 6 months, I need to make an application for what? Refund of export duty. Okay. Next, refund of import duty will they give? Yes, same story, reverse. I had imported the goods. I had paid import duty. But later I realized, oh, your goods was not up to the mark. Actually, even before the goods come to Indian port also, I can pay import duty in advance. Now listen like this. Sir, I had filed bill of entry, paid import duty. I was waiting for the goods to come. Goods came, but I was shocked after seeing it. I didn't order this goods. I didn't order these goods. The exporter has sent some cheap quality product. So I will return it back. Or I will tell, sir, I don't want these goods. I am leaving it here only and I am going on. I am not even taking it. Or in front of the customs officer only, Kumar Swami, I am destroying it. Sir, frustration full. On whom? On the exporter. Telling, you sent me this goods, sir. You cheated me. You that this and that. In that case, I destroyed the goods in front of customs officer only. If I had already paid import duty, will they refund it back to me? Yes. Where on the import of any goods, duty has been paid, that is import duty, upon clearance for home consumption, such duty can be refunded to the person by whom or on whose behalf it was paid. If the goods are found to be defective or not in conformity with the specification. For example, sometimes I will get to know this only when I take it to my factory, started using it. Oh, yo, sir, full dummy. Clear? I repeat. Assume I paid import duty. Goods were cleared for home consumption. I took it to my factory, started using it. When I started using it, I realized whatever they have sent is on full dummy products. Clear? In that case, can I request the refund of the import duty paid? Yes, provided I will send back the goods. The importer does not claim any duty drawback with respect to that goods. So I am not claiming duty drawback under section 74 or 75 because if I claim duty drawback, no refund in that case. If the goods are exported back or importer relinquishes his title in the goods, relinquishes means what? Cancels. I told I don't want these goods. They are destroyed in the presence of proper officer. Means, guys, importer was not happy with the goods received. So he will do either of these three things. What is it? Sir, he will send back the goods. Or relinquish his right telling, I don't want these goods. Or in front of proper officer only is destroying everything. Full, sir, breaking it, destroying it. In any of this case, whatever import duty is already paid, will it be refunded back? Yes. An application for refund of duty is to be made within 6 months from the relevant date. Okay, within 6 months from the relevant date. That is the date when the proper officer makes an order for clearance of goods when they are exported back. Okay, if it is sent back, sales returns. Within 6 months from the export, I need to make an application for what? Refund of import duty. This is in case of, sir, I had purchased the goods, received it. Later, I was not happy. I'm sending it back. I'm sending it back. In simple, sales returns. Or date of relinquishment if the importer relinquishes his title to the goods or date of destruction where the goods are destroyed. In any of this case, within 6 months, the application for refund of import duty has to be filed. Moreover, for all the general refunds of duty, apart from the above ones covered, have a limitation period of 1 year. That is, the refund application must be filed within 1 year from the date of payment of duty. Means, in any other case, if I am claiming a refund, I need to make an application within how many time? How much time? 1 year. Except the above. Except the above, if I am claiming a refund in any other case, within 1 year, I have to do it, guys. Oh. Miscellaneous. Assessment of duty. Okay, guys, who should do the assessment? For example, if I am the importer, who should calculate the import duty to be paid? Me. If I am the exporter, who should calculate the export duty to be paid? Me. If I am not able to do for any reason, can I ask the custom officer, please help me? Yes, that is called as what? Provisional assessment. He will do provisional assessment on behalf of me and ask to pay something on the basis of estimation. And I should also promise him telling, sir, whatever final amount you will tell, no, after the final calculation, I will pay it, sir. If there is any difference, I will pay it, sir. We discussed about the provisional assessment even under the GST, now similar. If I don't do both, I didn't do anything self-assessment also. I didn't ask the proper officer also to do provisional assessment. Then they will start. They will start. And if they start, consequences will be more, including penalty and all. Yes. Section 17 of Customs Act prescribes the method for self-assessment of duty. The importer and exporter must self-assess the duty if any leviable on such goods. This self-assessed goods may be verified, examined, or tested by the proper officer. For verification, the proper officer may require the importer, exporter, or any other person to produce any document or information on the basis of which duty leviable on the imported goods or exported goods, as the case may be, can be ascertained, and thereupon the importer or exporter on such person shall be bound to produce such document or further furnish such information. Okay. If proper officer asks any information or document, should importer or exporter furnish it? Yes, it is their duty. Where it is found on verification, examination, or testing of goods or otherwise that the self-assessment is not done correctly, the proper officer may reassess it. Like we had a scrutiny assessment, right? Same way here. If the importer or exporter has done assessment, but he has not done it proper. So the proper officer understood, or the customs officer understood, that whatever assessment is done by importer or exporter is not correct. In that case, they can reassess the duty leviable on such goods. Where the importer or exporter is unable to make self-assessment and makes a request in writing to the proper officer for assessment, or where the proper officer deems it necessary for any reason whatsoever, the officer may direct that the duty leviable on such goods be subject to provisional assessment. If the importer or exporter, as the case may be, furnishes such security as the proper officer deems fit for the payment of deficiency, that is nothing but difference, if any, between the duty as may be finally assessed and duty provisionally assessed. Similar to provisional assessment, guys. I already told you, I will repeat again, listen. Now, if importer or exporter is not able to do self-assessment, he can request the custom officer, sir, do assessment on behalf of me. That is called provisional assessment. First, initially they will do estimation and ask me to pay some amount. Assume they asked me to pay 3 lakh. Now they passed final order. As per final order, it is 4 lakh. Should I pay the remaining 1 lakh? Yes. And when I'm requesting for a provisional assessment itself, I should have promised them. I should have given a security telling, whatever is the difference as per the final assessment, I will pay it if there is any difference. What if I already paid 3 lakh, but as per final assessment, it is only 2.5 lakh? Will they give back my 50,000? Yes, they will give it back. Okay, so much similarities, guys, between GST and customs. Both are indirect tax only, no? Okay, but only the power act and all is different. Here, who will have power? Custom officer. There, who had the power? Proper officer. Here, the act is what? Customs Act. There, the act is CGST Act. Okay, next, tracking device or data locker. Guys, these are the devices which are attached to the containers or to the ship. Now, you know, there will be few devices which will be attached to the ship or even flight and all. Why, sir? To understand the temperature, to understand the humidity, to know, sir, when is it safe to land and all. They will have various devices attached to the flight or to the ship. When ship is coming to India or when flight is coming to India, along with this tag, tracking device and data logger, will we consider that even this devices is imported? No, no. They are not imported. They are attached to the container. They are attached to the ship. They are attached to the flight. They are not considered to be imported, guys. As per this notification of central government, a device such as tag, tracking device or data logger already affixed on the container at the time of import shall also be eligible for exemption from the duty of customs and integrated tax. Means we don't consider that as imported, it is exempt from the customs, guys. Even IGST is not applicable on it. Okay. Next, prohibitions. Central government may prohibit either absolutely or subject to such conditions specified in the notification the import or export of goods of specified description. Means for the following reason, can central government prohibit the import or export of any goods? Yes. For example, for security reasons, they told we are banning few apps. No, same way. Do they have the right to ban anything for import and export? Yes. And even actually now I guess the rice it was. Okay, few months back or 1 year back, they told central government passed a notification telling we cannot export rice. Why, sir? Because for domestic consumption there was a shortage. So government was worried about if people export it later, we will not have it for domestic consumption. If that is the case, also can they prohibit export? Yes, especially if something is exported, sir. If it is exported in too much quantity, and tomorrow we will have the problem of shortage. If that is the case, can they tell no, no, for some period we cannot export? Yes, clear. Because first we will see ourselves. If we have excess, only then we will be exporting it. So government has that power. Central government may prohibit either absolutely or subject to such conditions specified in notification the import or export of goods of specified description for what purpose? Maintenance of national security. Now, sir, few goods are dangerous for the country, sir. For example, if you are importing bamboo, gun, and ammunitions and all, will they allow? No, 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 sorry. Okay. If it is for police force or army, okay. Normal people are importing all the unnecessary things. Will they allow? No. Next, maintenance of public order and decency, prevention of smuggling, conservation of foreign exchange, safeguarding the balance of payments, protection of human lives and animals, and that also will happen. Sir, we are importing some goods or any technology which will be harmful for the animals or harmful for the birds, sir. Can government prohibit it? Yes. Protection of national treasures, that is any monuments and all, protection of patent and trademark, prevention of contravention of any laws or in interest of public. Prevention of contravention of any laws means, for example, sir, it is against the FEMA law. If it is against the FERA or even IBC, can government stop importing or exporting of these goods? Yes, any law. Okay. Offenses. The following would constitute as offenses under the Act: any misdeclaration in respect of goods vis-a-vis its value or description or weight or origin. Offense, guys. Assume I imported a goods by giving a wrong information. Wrong information. I had imported standard 1 goods, but I have given the details about standard 2 goods. So that value will come down. What, Nikhil? So that value will come down. So I have declared the different value of the goods, or I have given different details about the goods so that I can avoid paying the tax. Second one, violation of allied acts. Example, violation of Wildlife, Drug and Cosmetics Act, food laws, etc., or even FEMA. I have done any violation. Is it an offense, guys? Yes. Sir, I have not violated Customs Act, sir. Still, if you have violated any law of the country, it is considered to be violation. Landing of goods at unauthorized ports. Sir, the ship was given or the flight was given a permission to land in Mumbai airport, but it is going and landing in Pune airport, which is a part of Maharashtra only. Is it okay? No, no, that is also offense. And obviously, if it is for some reason, for example, sir, it was not safe to land there. In that case, can they go and land it in some other place? Yes, if they have genuine reason, obviously, it will be not an offense. Because sometimes due to heavy rain, due to like problem in temperature and all, they may shift. Sometimes the flight which was supposed to be landed in one airport can go and land in another airport only for safety purpose. That case, it is not an offense. Such offenses could result in civil or criminal liabilities or both, and both could run simultaneously. Either it will be civil or criminal or both. Criminal prosecution could result in imprisonment plus fines, and civil prosecution could result in alienation of wealth and penalties. Alienation means they can take back my assets and all. Okay, to recover whatever amount is due from my side. Criminal liabilities. Punishment up to 7 years. Offenses involving duty evasion of more than 50 lakhs or prohibited goods are non-bailable. Non-bailable means I will not even get bail in that case. Okay. If the amount involved is more than 50 lakh. Next, fraudulent duty drawback claims exceeding 50 lakh. Means I have claimed a fraud duty drawback by giving a wrong information of how much? More than 50 lakh. In that case, is it non-bailable? Yes. Next, civil liabilities. Recovery of duties short paid, interest charge, penalties. Means if I have not paid what I was supposed to pay, can they recover it along with penalties and all? Yes. Confiscation of import and export goods. Can they seize my goods? Yes. Confiscation of conveyances used for smuggling. Can they seize the ship, flight, or the vehicles? Yes. Up to 200% of duty for unaccounted goods. Means whatever you are supposed to pay, 200% of that they can recover it. Okay, if it is unaccounted goods, unaccounted means, sir, I didn't declare this details, sir. I'm importing 1000 kgs, but I gave in details only about 800 kgs. How much is unaccounted? 200 kgs. Up to 5 times the value of the goods for forged documents. If there is any forgery and all, 5 times they will recover. The normal limit for above prosecution is 1 year. Whereas for intended fraud, that is intentionally I have done something, then the time limit for the above actions is 5 years, guys. Okay, only few small things are left. That's all. After that, only two small things. Advance ruling. Advance ruling is simple. Guys, I am asking for a suggestion in advance. I am asking for a suggestion in advance. Now assume I am planning for import of any goods, but I don't know exactly how the things are or what is the rate applicable for my goods, import duty. Clear? Now, can I ask for a suggestion from the customs authorities? Yes. If I am able to do anything for which there is no clarity for me, can I get a clarity in advance? Yes, that is called advance ruling. That is called as advance ruling, guys. This refers to the determination by the authority of a question of law or fact specified in the application regarding the liability to pay duty in relation to an activity proposed to be undertaken by an applicant. Okay. Now, I am making an application before or after? Before I undertake anything. Clear? Yes. In the context of Customs Act, the activity above in the definition would imply what? They are talking about activity here. What is that activity, people? Are you? Activity implies what? Import or export. Sir, I want to get engaged in import or export, but I'm not sure about this. Can I get a clarity through advance ruling? Yes, I can make an application. The application has to be made in quadruplicate, that is 4 copies, with the fees specified and can be withdrawn within 30 days of the application. Means I can make an application along with some fees in 4 copies. And later I made an application. Later I only understood. I met my friend. I met my friend. He was an expert. He told, hey, this is what simple, man. Take it under. He gave clarity to me. Now I had already made an application. Now can I withdraw that? Yes. I can withdraw it within 30 days. Telling, sir, I got a clarity. I got a clarity. It is imperative to note that for matters already pending before the tribunal, court would not be admissible under the advance ruling separately. Means if there is any case pending in the court or tribunal wherein the still final order is not given, for the same, can I apply for advance ruling? No. They will not give the suggestion. They will ask, wait for the court judgment. Because let court give the final judgment, then obviously I will get a clarity. If still I have not got the clarity, can I ask for an advance ruling? Yes. The ruling must be made within 90 days of the application. That is, once I make an application, the ruling will be given by the proper officer within how many days? 90 days. Next, settlement commission. Guys, see, if I have any issues, now assume the proper officer has asked me to pay some amount which I am not okay with. If I go take a route of court, tribunal and all, it will take too long time. Instead of that, we have an alternative for immediate settlement. What is it? Settlement commission. Settlement commission. So if I go and approach them, they will try to give a solution as early as possible. Okay. We will see it. Settlement Commission has been constituted under the Customs Act to provide speedy resolution of disputes pending before an adjudicating authority. The cases can be referred by the applicant with the commission. Okay. Why, sir? For speedy resolution. Means I want an immediate solution, sir. I cannot wait in the court or tribunal for so long period. They keep on extending, adjourning and all. I cannot wait. I want immediate solution. Then I can go through what? Settlement Commission. Once the case is submitted before it, it enjoys the exclusive jurisdiction over it and then can consequently perform the functions of the custom officer. And thereafter, the custom officer cannot investigate, adjudicate, or issue notice or corrigendum. Means, once I approach to the settlement commission, no one will have a right to intervene, including custom officer. Even custom officer will not have any right to intervene, guys. Okay. The application will be disposed effectively and suitable orders would be issued by whom? Commission. So commission has given a order. The order of the commission are non-appealable. Sir, can I go for an appeal? Can anyone go against the appeal, against the order of the commission? No. However, amenable to writ jurisdiction of High Court means, can High Court request the commission telling, sir, cross check once, reconsider it? Yes, they can request. We cannot go for an appeal, but High Court in a writ jurisdiction they can tell that reconsider it. Try to look into it once again. Okay. The appellants can also take the route of tribunal or High Court and Supreme Court under the litigation mode. Means instead of going to the commission, sir, can I go through the route of tribunal, High Court, Supreme Court and all? Yes. But normally people believe that if I go through this route, it is too much time consuming, sir. If I want immediate solution, they will go for what? Settlement. Settlement commission. Is that clear? Yes, guys. So this all are the provisions with respect to customs law. To the extent possible, I have tried to simplify it as much as possible. So from exam point of view, is this enough? Yes, guys. Whatever provisions we have covered, along with the questions, this is more than enough. Clear? So just make sure that you know everything, because sometimes you think, all these are simple topics and you will leave it. Assume they ask 3 or 4 marks question on it. Clear? So don't leave anything. Actually, it is very simple, especially after we understood GST, this and all. Too many similarities is there. When compared to GST, this is more simpler actually. Clear? Here we discuss about commission or even the assessment, provisional assessment and all. There we have learned in detail. When we already know what is covered in GST, this becomes very easy, guys. Clear? Yes, we are done.